What's going on, folks? Welcome, welcome, welcome. You're live, Mr. Black. IG doesn't seem to be working for some reason. Sometimes it does this, man. Just this weird stuff. How's everybody doing this morning? What's up, Mighty? I got YouTube and I got the Instagram, but I don't have IG working for some reason. It just won't go live. Maybe I have to refresh the page again. Let's try this again. That didn't help. That definitely didn't help. Oh well. It is what it is, man. That's what we got for today. YouTube and TikTok are live. All right. Let me know anything you guys want to check out in the chat. If you have any tickers, any currency pairs, anything you want to look at, we'll check it out together, guys. Spot gold. Sure, let's check it out, man. We're at ATH on SP. S&P. I'm sure you guys saw that this morning. USD. I'm thinking I'm going to make Fridays a little bit different too. I'm going to make it like a Q&A. To make things a little more entertaining for myself, guys. I like to mix it up a little bit more. So I'm thinking like I could do Fridays be like Q&A for anything you guys have questions about for trading. Mondays could be like more basics. And then the rest of the days we'll just do our regular thing, you know? Mix it up a little bit more. What's up, Norman? All right, so here we are in spot gold. For anybody who doesn't trade spot gold is the most heavily traded gold asset in the Forex market. Forex is the biggest market in the world, so massive, massive amounts of capital being traded. AMD and SoFi, sure, man. Yeah, it makes it a little more entertaining for me, man, you know? Sometimes it gets a little boring when you don't have variety. It's more fun when you have variety. Spot gold, AMD, and what was the last one? SoFi. Gotcha, brother. All right, so let's go back to spot gold. All right, so to understand, what's up, Charles? So to understand how professionals trade, guys, the first thing we do is we look for areas of institutional order flow. We look for areas where banks, hedge funds, and financial institutions are buying and selling. The reason you see professional traders always start with this is because most major price movement is driven by banks and institutions. So when we're looking at the charts, we're looking for opportunities to buy and sell together. Your live is not eligible for recommendation restricted because it primarily directs people off the platform. Oh, God, dude. Like, what is up with TikTok? I haven't directed anybody anywhere. Ugh. Submit. Like, I literally have not directed anybody to go anywhere at this point. I'm just live, and it already has a problem with it. I don't understand what TikTok's thing is. Like, you can't acknowledge the existence that there are other websites. That's a problem. What's up, VT? Just now, like as I'm live with you, just said that. It's so difficult to deal with them sometimes, you know? Whatever. We submitted the appeal. Anyway, what was I saying? So we look for areas of institutional order flow. Where are the banks buying? Where are the banks selling? Do we have an opportunity to buy and sell together with them? That's the whole foundation of what we're doing. I think it's doing it because I mentioned that we were live on another platform simultaneously, which is like, dude, you know, then do better for your people on lives, right? Because in my experience, thanks, TradingView. In my experience, they'll do little things like throttle who they send. Like I had somebody complain the other day that they didn't receive the notification. It's like, I don't control notifications. It sends it when it wants to. It sends it and it doesn't send it when it doesn't, you know? So I think that's their way of getting you to try and spend with ads and stuff like that. But then it's like, well, if you don't show the followers, then people are going to look for multiple platforms. That's just the nature of how this works, right? We go online so that we can have more people viewing what we do. GDX? Sure, I got you, Zay. Let me put it here on the list. We'll see, Clever. I mean, I think probably, I mean, they're going to have to take profit at some point. Where are they going to take the profit is what we don't know, right? We can't predict where they're going to do that. So that's the difficulty with it. All right, so back to spot gold. So here I have institutional buying. I have the structure ZM. Sure, I got you, Mix. 1 second. Let me put it on the list. ZM. I don't know. I'm not going to worry about any of these things anymore. I'm just going to kind of do my thing, and that's that. So some bank bought heavily here, driving price action up. And you can see the imbalance coming out of equilibrium, right? We had impulse in, balance, awkward balance, but still balance, balance. And then we had impulse out, right? Drop in, balance, rally out. So what do we have here? We have an imbalance of more buyers and sellers driving price action up. Now, why is this likely institutional? The reason it's likely institutionally driven is because when you're looking at spot gold, you're looking at, first of all, the largest market in the world, which is the Forex market, right? Forex trades over $7 trillion a day. NVIDIA? Sure. NVDA trades over $7 trillion a day. So massive, massive market, right? Huge amounts of capital flowing in and out of the market. And you're looking at gold, which is one of the very heavily traded assets as well. So for you to actually move the price of spot gold, you have to be placing a very significantly sized order. And the only people that are really capable of placing orders of that magnitude are the major banks and financial institutions. Does that make sense? Everybody give me yes or a like if that makes sense to you. Actually, give me a yes or a like anyway to help boost our live here, guys, since TikTok doesn't like us right now. So help us get boosted to other people's read pages because they do care if people hit likes. So I have an imbalance driving price action up. Now, more importantly, you can see it left behind unfilled orders to the point that we had already retested, if you look over to the left, this continuation pattern over here, right? We had this original continuation, impulse, balance, impulse. We came back in, we hit the unfilled buy orders, we rallied back out. We came back in, hit the unfilled buy orders, rallied back out, came back in again, hit the unfilled buy orders, and gave a little bit of a whimper of a rally before finally starting to deeply penetrate into the zone, right? So now we're starting to get deeper penetration into the zone. Could it still hold? Of course it could, but take into consideration things that are happening. We're at ATH on S&P right now, right? We're starting to see the market rally. We're seeing positive reactions towards some of the things happening fundamentally. Could we finally break through? Well, yeah, gold tends to have more of an inverse relationship with the stock market, right? When people are nervous about stocks, they pull money out and they put into what they consider to be safe havens like gold or, sometimes the US dollar, depending on the structure of what's happening. When people are more enthusiastic or more optimistic about the stock market, they start pulling it out of the safe havens and start putting it back into the market. So what we're seeing here is that inverse relationship playing out in the charts, right? We're seeing gold drop as we're seeing the S&P rally. Is everyone with me on that? Does that make sense? So just little things to understand. The US dollar tends to have an inverse relationship roughly about almost 2/3 of the time with the S&P, but not all the time, right? So depending on economic policy, sometimes it will move together with each other. Oh, I mean, this week's been an intense week of seeing how financial institutions really drive price action in the markets, right? Like I'm gonna actually put a video together. If I remember, I plan on putting a video together of oil for Monday because it's a great example of why people shouldn't just trade off of fundamentals, right? I mean, Monday, what happened with oil? Oil dropped tremendously, right? And if you were a fundamental trader, if you were just reading the news and hearing what people were saying and everything, what would you think most retail traders were looking to do with oil on Monday? Were they looking to go long or short? Right? Based on everything they were reading in the news, what were they thinking? They were thinking, time to go long, right? Time to buy. Man, this thing's going to rocket to the moon from the way people were talking about it. But if you look at it on the charts, we were in we had gapped up into a major area of institutional selling, right? Not only on CL, not only on crude, but we'd also done it on USO. Like both of those gapped right into institutional supply. And it's a great example of why you shouldn't make your trading decisions purely off of fundamentals, right? Because if you were making your trading decisions purely off of fundamentals, you would have been going long. But if you understand where the banks and institutions are buying and selling, you would say, whoa, we're in a major level of institutional selling. I'm not going to buy here. That's an insane proposition. Why am I going to go against higher time frame oppositional structure? I'm going to trade against the banks. That's not a good idea, right? And so, who won in the end? The banks won. Money always wins at the end. The reality of it is money overrides fundamentals, money overrides technicals most of the time, right? So we always want to be aware of those things first, where the banks and institutions are buying and selling. And then we look for opportunities. And then we can use stuff like technicals and fundamentals as confirmation. Cool. Impulse analysis, right? Let me see. The short demand, this one right here. Yeah, impulse balance, impulse pivot reversal right here, right? And when this one comes very close to hitting it as well, right? But we just hit it either way. We just hit the end fiddlers. You can even see the little reaction off of it, right? We're getting a little bit of reaction. My concern right now is we're on the fours, and I have supply right here, and I have demand right here. So I'm getting a little crushed. Oh, you're saying the continuation pattern. It's because you said demand. So you mean the supply zone right here. Supply, yeah. So now we're going to drill down to the hourlies, and this is where we're going to see if there's anything actionable here. I'm concerned about risk to reward ratio right now because it's very tight here, right? How you guys doing up there on that other place that I can't mention? Otherwise, TikTok gets mad at me. How's everything going up there, guys? Because I have you guys on the other screen. I can see both. All right. Here we are on the hourlies. Do we have any clear institutional order flow here on the hourlies? Well, I have a continuation right here. I have this impulse balance, impulse continuation area of institutional selling. It is a retest of this continuation, which is really weak impulse. This is a little cleaner up here. Look at this impulse. Oops. That was interesting. This is a little cleaner. Look at this impulse, balance, 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 impulse right there. That one still hasn't been hit. My issue is, of course, we are inside of higher time frame demand. So can I really take a short off of this level at the 32.9401 when I'm sitting inside of higher time frame demand? I mean, you know, it's not the best decision if we were going to do that, right? On the buy side, we have a little bit of continuation. Well, actually a little pivot reversal right there. Oh, look at that. That was that wick. Do you see that wick? Remember we were talking about how it came close? That's why. Look at that little demand zone right there. So it hit that hourly demand, impulsed out, came back in, hit the end field orders, popped up. And then you have another little one down here on the pivot reversal. Impulse, balance, balance, pivot reversal. Little demand right there. It doesn't really change structure. And is that the one? Was that hit right now? And that was hit right now. So here's the deal, man. I mean, for me to be able to take a short off this level, I need to break through this higher time frame demand. So we would need to candle close through the demand zone, and then we could look at taking a short up here. As it stands right now, I have a whole lot of nothing. We've already hit this zone. We've already hit this zone. This is counter, right, in terms of higher time frame structure. It's with trend, but it's counter to higher time frame structure. And then this one up here, we need to break through as well because lower time frame instead of higher time frame positional structure. So there's not a lot for me to do right now. You know, I got to break through this higher time frame demand zone so I can eliminate this big green box in the background, and then I can look for some short opportunities here. But as it stands right now, until I make sure that there are no unfilled buy orders left on here, I'm not messing with these zones. Is everyone with me on that? Does that make sense? It could, but it's one of those things, Abdul, where I have to be careful. It could absolutely come back, but my rule is I do not take lower time frame zones inside of higher time frame oppositional structure. Period. Like that's been my rule for many, many years, and I just don't do it. Does that mean sometimes I'll miss trades because of that? Sure, but I don't care. Like I'd rather take a higher quality trade. So it's not like if a price comes back up here and hits the zone, would I be surprised if it drops down? Not at all. I wouldn't be surprised if it drops down at all, but I still wouldn't take the trade. And there are a myriad of other reasons that I can point to beyond that. But either way, that right off the bat, I just don't take lower time frame structure against higher time frame oppositional structure. Lower time frame zones against higher time frame oppositionals. Cool. All right, let's keep going. The only bummer about the multi-platform thing is not having music, man. I like having music in the background. That's the only legit bummer about this. I have to find one of those. What are those? There's like websites where you can play like generic music that they allow you to play across the board. Does anybody know what those are? I remember there was one where it's like you can play this like it's YouTube or well there, and now I just pissed off TikTok again. It's social media safe. Social media safe music that you can play anywhere. I don't remember what it's called. All right. We just reacted off that supply zone here on AMD. We're getting a little bit of a bounce. We had already hit this once. So what we were looking at with this supply zone is only if we were going to get a confirmation trade. We just hit it, gave a little bit of reaction, and we'll see what comes out of it, right? We have to see how this day pans out before we even consider taking a short here. So it's really going to depend on what happens at the end of the day and where we are at the end of the day with this candle, at least from a daily perspective. I still like this demand zone, man. Look at this beautiful daily, weekly correlation. Beautiful, strong impulse out. Broke past opposition with a breakaway gap. Like that's like almost my favorite type of trade. The only way this would get better is if I had monthly correlation in the background, right? But my favorite type of trade, for anybody who doesn't know, is multiple time frame correlation with a breakaway first retracement. Like that's my ideal type of trade pretty much. We're just missing that monthly correlation in the background. But as far as the setup goes, look at that beautiful impulse, broke past opposition, high probability of there being unfilled buy order sitting down there, right? So that's a very interesting level as far as I'm concerned. All right, that's along, by the way, at the 116.16. So here, maybe we can get a confirmation short at the 147.35. I'd be careful, see what market sentiment is on Monday, and we'll have to see how this closes out, of course, as well, see if that's viable or not. So that's what I got for you on AMD, man. SoFi. All right, let's go check out SoFi. SoFi. Breaking through those supply zones, you can see we gave a little reaction off that zone. Same way we gave a little reaction off this zone, right? This is what's kind of cool about order flow. Like I'm going to delete these zones. Obviously, we've broken them, but I just want to point out to anybody who's new. Look at how the zones reacted the first time you hit. Everyone gave you a reaction, right? So here we had institutional selling driving price action down. But when this bank sold, they weren't able to fill all their sell orders. So they were left with unfilled orders sitting behind, right? So price came back in, hit the unfilled sell orders, bounced back down. Came back in, hit the unfilled sellers, bounced back down. Came back in, hit the unfilled sellers, bounced, came back in, bounced, came back in, bounced, and then finally broke, right? So that many hits, and then we broke it. And then we formed this little impulse bounce, impulse continuation. Came out, came back in, hit those unfilled sell orders, bounced, and then broke, right? And then finally this last one, impulsed out, came back in, hit the unfilled sellers, bounced, and then broke. Isn't that cool? So like, even though the zones are dead now, it's still cool to see how price reacts to imbalances in order flow, because this is the whole foundation of how professionals are trading, right? We're identifying where the banks and institutions buy and sell to see if we have an opportunity to buy and sell with them. So if you want to learn to trade, I strongly encourage you to understand institutional order flow, because that is really the foundation of what causes most major price action markets. Where banks and institutions buy and sell is something that is very, very important to us as traders, because they're placing very, very large orders. They're not buying hundreds of shares or thousands of shares. They're dealing with millions of shares, millions of contracts, right? Huge, massive positions. But because there's only so much liquidity, they're only able to fill some of their order at a time before price explodes away from the imbalance they've created. All right, so here on SoFi, next actionable level will be this level up here. We have this beautiful impulse, balance impulse. The reason I'm yellow bordering it, why am I yellow bordering, guys? Why am I putting a yellow border on this guy? You guys tell me in the chat. There's a reason for that border. It is. You see that right there? That's earnings. So that's a fundamentally driven level. Yeah, everything I'm marking are areas of institutional order flow, the face. So all institutional orders are order blocks. The reason I use the term institutional order flow is because I'm specifically interested in order blocks that are institutionally driven. I'm not interested in all order blocks. So like all institutional orders are order blocks, not all order blocks are necessarily institutional. So like an example of that would be, let's say the CFO of some company decides to go and buy whatever, 20,000 shares of the company, right? Is that an order block? Yeah, it's a significantly sized order, right? But is it an order block that interests me as a trader? Not even a little bit, right? It's not a significantly sized order to me in terms of something I would be willing to trade on. But if Goldman Sachs comes along and decides they want to buy 5 million shares of the company, well, that does interest me, because that's such a large order that not only will it drive price action by creating an imbalance, it will very likely leave behind unfilled orders sitting at that level. And that's really where we're looking for opportunities, right? All we're doing at the end of the day is we're seeing where the banks and institutions buy and sell to see if we can buy and sell with them. But for us to be able to do that, they have to be placing orders large enough, not only to drive price action, but to also leave unfilled orders sitting behind. Cool. No, yeah, it's just because of the fundamentals. Exactly right, San. So we just had this earnings. Now, things I like about this. Earnings were positive. But what happened to price? Price dropped. So this is an interesting one for us, because I love when we have oppositional price action from the earnings report. So this is likely institutional, but I can't say it definitively, right? Can I tell you just by looking at the chart, yeah, that's all institution? I have no idea, right? It's fundamentally driven move. So we're going to be a little more careful with levels like this, and we're going to treat it as what's called a confirmation trade. So if price does come back up here to this supply zone, we do have multiple time frame correlation here at the 1792, right? Zones on top of zones, beautiful strength of movement. It's a nice level, but I'm not going to take it on faith. I'm not going to take it as a straight limit order. I would wait for a confirmation close reversal, and then I would see if the risk to reward ratio validates that zone, because we do have institutional demand, or at least what looks like demand right here, right? So essentially, what I need to have is I need to have this come in and then candle close reverse out on the daily, but not so much that it kills my risk to reward ratio. As it stands right now, we have some breathing room. Not a lot of breathing room, but we have some breathing room, right? If I were to trade this short down to this demand zone, right now we're sitting at a 3.7. So I have a little bit of wiggle room here where it can candle close out and still give me a confirmation trade, but I don't have a lot of room. Does that make sense? So that's what I would like to see happen if I was going to take that short. From a long position, I can't take the lower time frame long right now against inside of higher time frame oppositional structure, so we'd have to break that one. Obviously, this one's already been hit, and this one is also too close to supply, so we'd have to eliminate this higher time frame supply zone to be able to take it. So these are both potential trades, right? But only if we delete the higher time frame oppositional supply zone. And then you have a confirmation short at the 1792. Cool. Yeah, so to understand like tier 2, tier 3 data, to answer your question, the face is asking for anybody anywhere in the world, shall we say. I'll just reiterate the question so people can hear it. He's asking about using market depth, which is more colloquially called order book, right? Tier 2, tier 3 data, level 2, level 3 data. Level 2, level 3 data, what it shows you is it shows you the best bid and ask prices at certain price points, right? So like when you open up any brokerage, it'll show you a bid and an ask, right? And then the spread is the difference between that bid and the ask. And it'll show you the best bid and the ask price that exists right now at that moment. When you get level 2 data, it's showing you the accumulation of the best bid and ask prices. So it's showing you the best 5 to 10 bid and ask prices. When you get level 3 data, it's showing you the best, I think, 20 bid and ask prices. So it's showing you the accumulation of where there are orders sitting, right? Now, the thing with that sort of stuff is that should only be used as a confirmation, because a lot of times retail traders will treat that as if it's like the holy grail, right? They'll hear about level 2, level 3. I remember myself, guys, the first time I heard about level 2, level 3 data, I was like, oh my God, this is what I've been missing. This is the secret sauce. And it's like, it was never the secret sauce, right? I just thought it was because I didn't realize where it stood in the hierarchy of things, right? So it's like, it's important to understand that you can use that stuff as a confirmation if you're seeing a level of institutional order flow and there's also good level 2, level 3 confirmation of that level. Awesome. That's the type of check mark you want to have. What's up, Minj? But if you're using it as something where you're trying to make decisions purely off the level 2, level 3, just understand banks aren't dumb. Like they're smart, savvy traders that understand that retail traders rely heavily on indicators and data of that nature, right? Like how many retail traders try and make their trading decisions off of volume? I mean, we literally see it every day on social media. You can scroll through these lives and you'll see all these people trying to make trading decisions purely off of volume. It's like, dude, volume can be misleading, as can level 2, level 3 data, right? They can trap you out. They can leave orders pending and then pull them at the last minute. Technically, is it illegal to spoof? Yeah, but you can justify it by saying, if these market conditions change like this, we might pull the order, and you just write that down in your order before you actually execute, so that if anybody comes knocking at your door, you can say, no, that was planned with the trade. That had nothing to do with spoofing. We would never do that, blah, blah, blah. That would be super illegal and stuff, you know? So just use it as confirmation, not as a decision-making factor. Does that make sense, the face? Because they are aware that retail traders look at that a lot, and they will use it as a trap. It can also help you with price slicing when you're doing your options trading, right? With defining proper strikes and things of that nature. 4-1. Nice, man. That's awesome, brother. Yeah, it's good to see you. A lot of you guys did really well this week, so I'm really glad to see you guys doing well with your trading. It's nice to see you guys progressing well. Several of you messaged me this week that you had really good weeks in trading. So I think this was a good week for people who understand institutional order flow. And I think it was a little bit more of a difficult week for people who don't understand institutional order flow. because the market's really, really reacted to levels this week, right? So, and not so much fundamentals as levels. So it's interesting to see that, and I think that's something that that you can see reflected in people's results. All right, let's go check out GDX. Zay, you ready, man? GDX. All right, so we bounced off that supply again. We came into supply, hit it a second time right there, right? You probably don't know IOF. No, I don't. They might not know that's what they're doing. Like I've seen traders before where they were trading off IOF, but they weren't understanding it. So I saw like some trader on the big red button. This was like last year. And he was talking about stuff. And he didn't really know how to describe it. He was like, I like it when it sets up like this. And he had stumbled on to IOF without knowing what he was stumbling onto. Like, so he was like, people talk about trading like that. He was talking about, you know, the fair value gap stuff. And he's like, I don't like the fair value gap because it doesn't seem the right. But I like this when it sets up in this manner. And I'm like, well, that's a demand zone. That's a supply zone. Like he worked through charts to figure out levels of imbalance, but he didn't know the term for it, you know? And so it's like, that's how I've seen it happen. But it's not because they're not trading off IOF. It's because they just didn't know the term for it, is the best way I can put it, you know? I've yet to see any trader that makes money consistently in the markets that doesn't understand where the banks and institutions are buying and selling. Even if they don't know the terminology for it, that doesn't understand how to identify those levels of imbalance. So they may call it something different, and I've definitely seen people do that. But at the end of the day, I mean, if you don't understand what's causing most price movement in the markets, then you don't really understand what you're looking at, right? You have to understand what's actually happening in the markets to trade. At the very minimum, at least understand price action, right? So anyway, back to GDX here. I have a little bit of a continuation here, but it's already been hit. Can you see this level right here? Zay, impulse, balance, impulse right there. There's a little bit of a continuation right there, but you can see we already retraced, hit those unfillers, popped up, and then obviously that impulse right there. Not really good structure here. You have a little supply zone here. Also not great structure here. A little rally up, balance, drop, and we've hit it as well, right? We've impulsed, come back into the supply, hit the unfillers, and reacted off of it. So we're a little bit beat up here, man. Like maybe you can get a confirmation trade down here at 49.44, maybe, you know. But that's about it, and that would be dependent on whether this sets up a supply zone. If you set up a supply zone here, then your risk reward is crushed. You have another continuation down here, little impulse, balance, impulse continuation with higher time frame structure. So nice multiple time frame correlation there. It has already been hit once. You can see how it gapped out and came back in. Can you see that? Gapped, came back in. So it's already been hit once, which means, again, best case scenario is a confirmation there at the 47.34. So not a lot of good levels here, right? Supply's already been hit. Demand's already been hit. Demand's already been hit. Supply's already been hit twice up here. This is not really great structure, but even if you consider it a good structure, it's been hit once, twice already. There's just not a lot here for us in terms of actionable trades right now. So maybe a confirmation here, maybe a confirmation here, but that's about it, brother. Cool. Yeah, exactly right, man. Yeah. 15-1 this week? That's awesome, G. Nice, dude. You guys are crushing it. Personally, that have been trading SNR and profit over years. Well, yeah, trading off support and resistance is going to get you caught in a lot of traps, right? It's not like support and resistance is bad to know. It's just, when is support and resistance most valuable? Support and resistance is most valuable when it coincides with institutional order flow, right? So it's like, is it really more important to understand support and resistance, or is it more important to understand institutional order flow? Well, if the only times that support and resistance really matter are when it's coinciding with order flow, then it's probably more important to understand order flow, you know? So it's not like, oh, what a terrible thing to learn this thing. No, it's fine. It's just tops and bottoms. But if you're trading purely off support and resistance, you're going to get caught in a lot of traps because most retail traders trade around those levels, which means banks often set liquidity traps around those levels, you know? So it's just understanding where it stands in the hierarchy. It's like all of these things, all these indicators and stuff, right? People put so much faith in indicators when they really shouldn't. I mean, like if I turn on an EMA here, I'm just trying to see, like, well, actually this one would have been still above, but I mean, at least it would have been kind of a confirmation. You would have been above the 20. But on terms of the supply here, right? In terms of taking that short, what's the EMA telling you here? If you're above the 20, Is that where you should be going short, guys? Theoretically, you should be going long, right? And like both of these, you can see it came back into institutional order flow and rejected because there were unfilled sellers sitting up here. So it's just a matter of understanding how this stuff works and how to use it properly. That's all it comes down to. All right, done with GDX, on to Zoom. Let's go check out Zoom. ZM. That help you out, say? All right, so this demand zone impulsed out, came back in, hit it once, bounced, went all the way up to supply, hit the unfilled sellers, and then broke through, right? Can everyone see that? So first hit, we would never have taken this demand zone, right? It was too close to supply, but can you see how it impulsed out, hit the supply zone, came back down, hit the unfilled buyers for the first time, came back up, hit the unfilled sellers, and then we broke through the level, right? So you can see how that zone worked once, even though we wouldn't have taken the trade because the risk reward wasn't there. Now we're back into this demand zone. Well, we just bounced off this demand zone, which has already been hit once, twice, 3 times at this point, and we're coming up to this little mini supply right here. Little impulse bounce, impulse pay reversal. That's also already been hit once and rejected. So nothing really clean where we are right now in terms of price here on Zoom, right? Up here, I have a nice clean continuation. Look at this continuation right here. Impulse, balance, impulse. That could be an interesting level for us. But it is a red continuation. So what do I need to do in this case, guys? If I have a red continuation, what do I need to do to make sure that it's valid? It happens, man. Sometimes it moves so fast, brother. Yeah, we got to drill down. Coin. Yep, I can put it on the list for you, brother. So what I'm going to do is I'm going to drill down to lower time frames here, right? Because we are on the dailies right here, but it's a red. And anytime I'm on a daily time frame or lower, and I have red or green continuations, I need to drill down and make sure that there's oppositional structure there. Does that make sense for everyone? So like, I don't know if this is just a small impulsive move because it's only a day, right? It could just be a small impulse for the day. So I'm going to drill down here to the 4s. And what I want to see in this area is I want to see green candle pushback. I want to see a fight between buyers and sellers where sellers clearly won, indicating that this is a valid level of institutional order flow. I can tell you just based on the structure, pretty much guarantee you that there's going to be green candle pushback, but we'll double check just to make sure. There's my green candle pushback. Can everyone see it? So I had impulse in, buyers and sellers fighting it out, but eventually so many more sellers and buyers that price impulsed out, indicating an imbalance of more sellers and buyers here driving price action down and likely leaving behind unfilled sellers sitting up there. Is everyone with me on that? Cool. So this is a valid level. That's a valid level on the daily. There is a little bit of a concern. If you zoom into it, I hadn't noticed this before. Do you see how we have a little gap out and then we come back in? So this has been retested, which means if price does come back up there, I need to treat it accordingly, right? Which might mean at that point, let me just make sure on the weeklies. If I come all the way up to that zone, I would still be in a downtrend. So I could take what's called a zone entry, right? And a zone entry means I'm waiting for the price to reverse within the zone before looking for a short out of it. Wouldn't have to be a confirmation in this case, Sam, because it would be consistent with trend if we come back up to the zone. We would still be in a downtrend on the weeklies. So if I'm consistent with the trend on a first retracement to a zone where the purity is at a half, I can still take a zone entry. If I'm on a zone that's already been penetrated more than 50%, then it's a confirmation no matter what. Or if it's a zone that's been hit more than once, then it's a confirmation no matter what. Or if it's a zone where it's been hit once and it's counter trend, even if it's less than 50%, then it's a confirmation, right? So that's like the rule for the confirmation. So if we were counter trend when we came back up here, it would definitely be a confirmation. But since we're still consistent with that weekly downtrend, then that would be able to be a zone entry at that point. Cool. So that's what I got for you, man. So potential zone entry there at the 80.26. Well, 80.26 up to 80.86, right? If we start seeing a reversal there. I mean, right now it's clean, and that's it. That's all we have here on Zoom. There's nothing really else of interest for us. Demand super beat up. This supply is no good, too close, right? There's just not a lot there. This one down here, mix. Well, it's already been hit once, twice, 3 times at this point. I mean, the times have taken that long right there would have been back here. That's when you would have taken it. The supply? Well, that's the one we were talking about. That's the one I'm talking about for the zone entry at the 80.26. You're talking about this supply right here? Or are you talking about this one? A or B? This one? No, this one's not viable, man, because look at it. It's first of all, it's too close to demand. The risk to reward sucks, right? The risk to reward sucks, and it's already been hit. So even if I was going to take it, there's not enough meat on the bone for me to take it, and it's already been hit anyway. Like this is at best not. I don't think it's even a 2-to-1. It's less than a 2-to-1. Do you ever place scalp trades, Mr. Black? Not anymore, Minge. I mean, I used to when I was younger. When I first started trading, I thought scalping was what I wanted to do. I think when people first start trading, a lot of times they think of scalping as being like potentially less risk or something, even though it's not, obviously, but they think it is because they're, smaller positions, in and out more quickly, not holding positions overnight. Like I've had a lot of people over the years be like, oh, but isn't it riskier to hold it overnight? It's like, why would it be riskier? You literally control your risk, right? So there's no such thing as riskier trades. You determine what your risk is on any trade. We're at ATH, brother, aren't we? We're at ATH, man. Whole lot of nothing for me to do on NVIDIA right now. We finally broke through that supply. It's about time, right? But I can't do anything up here, man. I need a pullback. I need structure. So like the nature of how we trade is we need to have targets, right? Because that's how we determine our risk reward ratio and whether the trade is worth taking. I do not have supply right now on NVIDIA. There's no supply zone. Of course, Minge. I mean, that's what Blue does, right? Blue's a phenomenal trader. There's absolutely nothing wrong with trading multiple different ways. The reason I don't day trade a lot, guys, like I show you guys futures trades all the time, right? Like we did this a couple days ago. I just asked someone in the chat to just choose a random week on what was it, ES or NQ? I don't remember which one it was, right? And the point of it was to show you how institutional order flow, if you're just selective with your trades, it works very effectively, right? But the thing that for me is never enticing enough is it's more time consuming, right? It's kind of like scalping in Forex. Forex isn't the best market to scalp or to day trade, but I have friends who do it. I know people who do it. It's not like you can't do it. It's just it's more time consuming, And if you're going to be in front of the charts, might as well trade futures because that's going to give you more bang for your buck typically versus scalping Forex. But you can certainly make money doing it. It just comes down to whether you're willing to put the time and effort in. For me, I'm not willing to sit in front of the charts that much. Tesla, sure. I would not scalp spot gold. It wouldn't be my recommendation, man. It's not the best market for that, dude. It doesn't move that way. It's the same reason I wouldn't really recommend scalping Forex. I mean, if you're going to start scalping Forex at all, if you're going to start getting to that world, then you're going to start having to go into, you're going to look at a bunch of stuff. You're going to look at, either you're going to use something like ATR to see if you're in ATR is just average true range, right? It's showing the average movement. And so like a lot of times people use either things like RSI, which will show you if something's overbought, oversold, or they can use ATR to see if they're within or without the normal bounds of movement within the day, right? And then they'll try and use that with typically some sort of indicator confirmation, like an EMA or something like that. And that's fine. You can do that. It's just very time intensive, and you have to be there at the right moment for the trade because it can move very quickly when you're trading on very short. You would also have to change the type of account you're trading. Like if you're trading a regular account with like a Wanda or something like that, you would have to change to an account that's not spread based, that's charged per transaction, because you'd be starting to do higher volume trades and you're looking at very, very small scalpy returns, right? You're talking about like, 5, 10 pips, 15 pips. Like you're not talking big gains on these individual trades. So that means you can't be paying, 5 pips or 3 pips on a spread because that could crush your entire profit on some of those trades. So you have to actually go and change the type of account you're trading on to a high transaction account, which they have that option, but you'd have to change over to that sort of account before you would want to engage in that sort of trading. Does that make sense? So there's just a few things you'd have to do. But honestly, if you're going to do that, might as well trade futures, man. Futures is better suited for that sort of trading than Forex is. Like futures will give you, in my opinion, more bang for your buck doing that exact same type of effort. if anything, a little less effort. All right, so here we are on GC. What are we looking at here on GC, brother? I can only speak to my trading, right, man? So I was never a day trader for the company, right, Dr. One? Like that wasn't my job at the company. So I was never involved in that sort of trading. General rule of thumb is you don't want to trade at all-time highs or all-time lows unless you're already in the trade. So you could be in the trade and you could be reaching towards the profit target. Like, don't forget, a lot of times the people who cause all-time highs, all-time lows are the banks driving price action through levels, right? So they could have a price target. Like just for a quick, I'll come right back to GC. Like we're coming up here on 6180. For all we know, a bank could have a price target of 6180. They might be waiting to hit their price target to start selling off, right? Because their issue is not driving price. Their issue is always liquidity, right? The biggest issue for banks is never driving price action. It's liquidity. So whoever is pushing price action up, I mean, you can literally see a demand zone right there. Whoever is pushing price action up on S&P right now, which I'm sure there are retail traders mixed in, but it's also going to be institutional. They're trying to hit a target. I don't know what the target is, right? But they're trying to hit some profit target that they have established ahead of time. Yeah, I would guarantee, I can't guarantee, can almost guarantee you that there are financial institutions that are currently long right now in S&P trying to reach a profit target. Now, where is that profit target? That's the part that we don't know, which is why we don't want to trade blind, right? It could be 6,200, could be 6,180, could be 6,190, could be 6,185. Like usually it's probably going to be a round number, but we don't know where it is and we don't want to try and guess, right? What if they're trying to go up to 6,220, right? Who's to say? We just don't know at the end of the day. But the fact that they will take the retail liquidity, they will take the retail liquidity. I think for right now, if you're starting to look at this 1, 2 candlesticks, if I were a financial institution, which I'm not, right? I don't work in an investment bank anymore. I would want to have a third confirmation, right? Because then I get all those momentum traders. So like for me, I'm looking at this as 1, 2, we're setting up, maybe we set up a third, and then we see the sell-off, right? Trap out all those momentum traders because retail traders love to chase price, right? So that's what I would think. But I mean, you can see the institutional buying right here. Like you can see them pushing price action up. But again, that's just pure supposition. I can't tell you that they're going to do that or not. I just know that if I was ever in that job, let's say I was a market maker, that's what I would be thinking and be like, let's push up price action one more day. We'll push it up probably to like around 6,200 and then we'll sell off and knock out these retail traders, push it all the way back down to our demand, fill more orders here and push price action back up. Like that would be my thought if I was a market maker, even though that was never my job. So, although I always feel like it must be a fun job in some ways, but also, dude, like it's also so like mean because you're really directly trading against retail traders. Like when the way I traded, I wasn't targeting retail traders. I was just trading for the company, taking positions that I thought would be profitable. But like market makers, for the most part, they are actively targeting retail traders. Like they're trapping them out, you know? So I always feel like it's a little cruel to do that, you know? Yeah, but, you know, to each their own, I guess. You know, I have friends who are market makers and they don't seem to have any issues with it. They don't seem to be bothered with it whatsoever. So I told you guys, like one of my friends that was a market maker, he owns an island, dude, you know, like he literally owns an island. I don't know a lot of people that own islands. So that's one of the examples, man. Mr. Green would be good. I bet you Mr. Green wouldn't be bothered, man. Yeah. It's you know what's funny, man? He did that. He like retired at like 30 something originally. And then he got really bored. Like he got really bored. He like lived on the island for I don't think even 2 years, like a year and a little bit, and then he just moved back to the States and he was just bored out of his mind. You know, a lot of stuff I think is about status, man. Like, I mean, you know, you'll see, like, I'll give you an example. My friend the other day asked me, why don't you get the Centurion card? And I'm like, I don't think the benefits are valued there. Like I forget what it costs per year, but I just remember seeing the annual membership thing, and I'm like, it's basically the same as the platinum, but it just costs more. And I'm like, who am I getting this for? To impress people that I have a black card? Like, who am I trying to impress? It doesn't give me, unless I'm missing something. But when I look through all the benefits, I'm like, I don't see anything tremendously beneficial with this card. But I think a lot of people do things in life to try and impress other people, which is, maybe part of people's journey. Sometimes that can be a driving motivation, so sometimes that can be the thing that helps you achieve a goal. But I think there comes a point in life where you're no longer motivated by impressing others, Yeah, that was the only case where I saw that it was justified, Scott. If you travel a lot, right? But for me, like, I don't travel that much to justify it. I was just like, what's the point? I don't understand what's the extra benefit I'm getting. I just understand I'm paying Amex more. That's all I saw out of it. It's costing me more money, and it's not really giving me a lot in return. Because almost all of the benefits that it has on the platinum as well. So I just wasn't seeing it. Now, the platinum I do think is worthwhile. That one I think is worthwhile in terms of the benefits it gives you. I have to include it. I got to include it all, man. I wanted to tighten it up, but we can't. I can't ignore that candle. All right, so we have demand here. We have supply. Supply is a retest of the pivot right here, right? The platinum gives you a bunch of stuff. I think the things that it gives you a lot of credits that end up, for me at least, paying for the card for itself. So like I end up, as far as I'm concerned, being pretty much break even or probably a little net plus just having the platinum, because it gives you like the airline credits. It pays for all these different things. Like I don't pay for a bunch of my streaming stuff because it's already covered with the card. It gives you discounts on gym membership. It gives you discounts. Obviously, it gives you whatever the priority pass stuff, which whatever. I mean, a lot of tickets will just give you access to the lounge anyway, so it doesn't matter, But I guess that's nice sometimes that you have that. If you have guests and stuff, you can bring more guests in. What else does it give you? It gives you Macy's credit every 6 months, which my daughter spends every 6 months. I wish she only stuck to, I think it gives you like $50 or something. She does not stick to the $50 that it gives you. She always spends more than that. But it's just like, it's little things that add up if you use them, and I use enough of them where it ends up paying for itself. Like I end up getting whatever I paid back just through the credits. So essentially for me, it costs me nothing to have it. And then you have some of the extra perks that it has there, So that's about it, is what I would say. Can we take a random week on NAS 100 scalp? Sure. Let's go look at it, man. Let me check it out. Sounds like I'm pitching an Amex to you guys. NAS 100. All right. So supply is a retest. We did create a little bit of zone creep on the retest, but you got to be a little careful with that. That's very, very close in terms of structure, right? Let's get down to the 15s here, see what the 15s give us here on GC. On the 15s, I mean, we do have a new structure formed below. So that's valid level right there. So 15-minute 1 hour correlation here. 33.43 is where the 15 starts, and the zones overlap each other at 33.44.1. On the demand side, nothing really here. Let's go over to the left from here and see what's over here. No. Well, there, yes. A lot of time spent. What's this called, guys? What does that look like? Let's see who's gone through futures focus. What is that called when it looks like that? We're on low time frames here. It's the only time you really see it still in the markets nowadays. Thank you for the likes and the follows, by the way, guys. It does help boost us here, so we appreciate it. Especially since I managed to annoy the platform. Yeah, that's accumulation, right? That's exactly what accumulate. It's also consolidation, right? Moving to the side. But in terms of market cycles, that's called accumulation. And that was something that was invented exactly by Wyckoff. Invented. Yeah, I guess invented. He's the one who came up with the concept. This was his structure in terms of how he trades. Wyckoff would look for accumulation, and then when you broke out of accumulation, he would start chasing the price action. And it's the only time you ever sometimes still see accumulation work is on low time frames like scalping, right? On higher time frames, If I'm spending a lot of time on, like, let's say a daily time frame, is that good nowadays, guys? That's not so great. That means I'm eating up a lot of the orders, right? So I'm weakening the imbalance. And because a lot of retail traders are breakout traders, banks set a lot of traps for the breakout, right? But back in Wyckoff's day, the markets moved much more slowly, right? And Wyckoff was early 1900s. So Wyckoff was trading in a time where orders were still actually written down on pieces of paper and put into a ledger at the end of the day to show transfer of ownership, right? So very, very different market, much slower moving market. So he correctly recognized that he could see when banks were starting to buy or starting to sell at a certain price point. And when they would exhaust all buyers or all sellers, he would essentially chase the imbalance caused by the banks exhausting all buyers and sellers, right? So he would, as soon as it broke out from what he called accumulation, or if the case of selling, distribution, he would go and chase the impulse out. And that was his methodology towards trading. So it was a very smart method in his time. It's just a bit antiquated now, and it's targeted by a lot of financial institutions because they understand a lot of retail traders are breakout traders. They chase price. But I mean, very smart guy in his time. Like, it's not like it's bad. It's just old, right? It's just not as effective as it was 120 years ago. But smart guy back in his day, right? Well, that's a shame, huh? Look at that. You got the 5-minute, 50-minute, 1-hour correlation, man. What's the problem, guys? We already hit it. We impulsed out, came back and hit it right there. That was the first hit. First hit right before that massive gap down. So it worked. It's just done already. Let's see on the 5s down here if there's anything good for the demand side of things. All right. Let's go see this demand zone, see if there's anything good over here. We'll see if it even lets me scroll this far, because TradingView only lets me go so far. Ooh, that's a lot of time. Man, is that a lot of time we spent there, huh? So in our world, this isn't ideal, right? This isn't ideal for us to spend this much time inside of a zone before impulsing out. Could we potentially take a trade? Sure. But if I'm going to take a trade off this zone, I would wait for a confirmation, man. Because just look at how much time we spent. We filled a lot of orders before impulsing out. I don't know how many unfilled orders are left behind. So I want to be a little more careful with that level. Yeah, I bet you there's still orders just because of the strength of impulse out. Like, look at that strength of impulse out. I bet you there's still unfilled orders, but I'm going to be more cautious, right? I'm going to be a little more cautious with the level. There is 5-minute, 50-minute, 1-hour correlation. Just maybe wait for a confirmation reversal out above the 3237.8 to then take the long, if you're going to take the long, right? So there's definitely a viable trade there. Just be a little careful with it because of how much time was spent there. These little 5 minutes, I'm not going to trade, man. Little 5 minutes like this are broken too easily. So I don't want to mess with those. Yeah, Dre, if I'm doing futures trading, futures more scalping. So I'm going to be drilling down to lower time frames because that's just the nature of how it moves, right? It moves much more quickly. So I'm starting on the hourlies here. Now, all that being said, guys, you should always mark off your levels on the dailies, weeklies, and monthlies anyway. Like if I was actually trading for real, if I was placing trades on this chart right now, I would have my monthly, dailies all marked off. And in this case, when I'm trading on low time frames, I just mark them off with a line so I know where they are. And then I draw my zones on the lower time frames. Did it hesitate because of supply to the left? You're saying over here on the 5? I mean, certainly looks like it, right? Yeah, you can see the bounce, man, right? In, out, in, out. So you got their little rejection there, right? Rejected off that supply before finally breaking through. So yeah, absolutely, man. 100%. All right, so that's it for GC. On to coin. Oh, by the way, if there's anybody new, sometimes I forget what I'm doing. If there's anybody new, if you'd like to learn more about trading, there's a workshop next Thursday. If you'd like to register for it, you can just go into our bio right here and just go right to this place. You can either click this link or just go right to that place, right? And it'll take you right here. And if you want to register for the workshop, it's free. It's going to be next Thursday at 7 p.m. Eastern. Just click this purple register here button. In the workshop, we'll do a deeper dive on all this stuff, guys, teach you more about how the markets really work. how professionals trade, like how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly so you can reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it. It's free, it's fun, costs you nothing. And if you're interested in becoming a member of TradePhantoms, we are going to have our July 4th promotion. So you'll have an opportunity to join at a discounted rate. All right. GC done. Let's keep going. What's next? Next, I have coin. On to Coinbase. How you guys doing at the red button? You guys have any tickers you want to check out as well? All right. Let's start here on the monthlies for coin. Institutional supply, institutional demand. Why did I not draw the demand zone? Let's clear the charts. I think when we last did this. All right, so I have supply right here, which we're back into. Nice impulse, balanced, impulse pay reversal. Some banks sold heavily here, driving price action down. And then I have institutional demand right here. Impulse in, balance, impulse pay reversal. Almost a little bit of continuation right here, but this candle is still active, so we'll wait for that candle to close. So demand right here, institutional buying, driving price action up. Let's drill down to the weeklies. First thing I'm looking for on my weeklies is my trend. What's my trend here, guys? Up, down, or sideways? You guys tell me in the chat. When I'm doing that, I'll take my vitamin. My horrible tasting vitamin. Up, up, up. Higher highs, higher lows all day. So what does that mean? It means ideally we like to go long, right? We'd rather trade with trend than against trend because trend trades are higher probability trades. Do we have order flow here? Yeah, I have an impulse balance, impulse pay reversal. So I do have an area of institutional order flow right here, driving price action up on the weeklies as well. And I also have multiple time frame correlation here and here, right? Two areas of multiple time frame correlation where the zones are overlapping each other, overlapping with a higher time frame monthly, and again, weekly, monthly correlation right there. So institutional buying, institutional buying, institutional buying. On the sell side, we're in supply. We're in a supply zone right now. So we are in an area of institutional selling. But one of the things I want you guys to take into consideration, all right, I want you to look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. So if you have a stock that was recently IPO'd, okay, if you bought pre-IPO, okay, if you bought it before, if you were an early investor, if you bought before it was the initial public offering, right, before it went public, they will oftentimes set restrictions on how you are allowed to sell that asset, right? And they will typically do it at quarterly intervals. So either they'll say, oh, you can start selling at the 3-month interval, the 6-month interval, the 9-month interval, or the 1-year interval. So if I have something that's recently IPO'd and then I see a sudden sell-off, but it's coinciding with one of those quarterlies, I'm going to be a little bit more careful with that level because I don't know how much of that is institutionally driven or how much of it is early investors finally being allowed to sell their position. Does that make sense, everyone? It's just something to take into consideration when you're looking at a stock that doesn't have a lot of history on the chart. You want to see why that level was created and whether it was created. So that's why I was counting 1, 2, 3, 4, 5, 6, 7, 8, and then 9 sell-off. Can you see that? So my guess, I don't remember, I've never looked at investing in Coinbase before IPO. I wasn't looking to be an early investor on it. But my guess is Coinbase only allowed early investors to start selling off their position at the 9-month mark. Cool, cool, cool. Everybody with me on that? Does that make sense? So just be a little more cautious with those levels because they might not be as much about institutional order flow as early investors being allowed to sell. There's something to be aware of when you're looking at recently IPO'd stocks like that. Anyway, you can see we've already come back and reacted off it once, and now we're deeply penetrating into the second time, right? So back to the weeklies, we do have order flow here. Impulse balance, impulse pay reversal. I'm going to have to include both those base candles just to be a little more cautious there because really that's the start of the impulsive movement, right? And that has already been hit. Once bounce, twice bounce, 3 times bounce, and we're in for the 4th time, deeply penetrating into it and coming back down. So not a level we're interested in trading at this point to go short, at least not in this time frame. Screed me? I'm assuming you mean something different in Michigan. What happened, brother? What happened on spot gold? Down to the dailies here. This is where we're looking for an actionable trade here. Little impulse, bounce, bounce, impulse, continuation. I think we're going to have to switch, shut off this TikTok live and switch to the other profile, guys. Because I think TikTok's not pushing our live to anybody. I think it's mad at us because I mentioned this place. They're like, how dare you even mention the word? We are the only existence social media in the entire world. So just, I'll switch over. I'm going to go to this one. Yeah, very, very low, man. We're at like 20 something people. We have 16,000 followers. We have 20 people in the room. So I think I'll switch over to the other profile and see if they like me more over there. And I just won't mention that there are other websites at all. There are no other websites. I don't even know what you guys are talking about. What websites? This is the only thing that exists. Cool, Michigan. Yeah, give me a follow over there, brother. I like this level. This is a nice level. Look at that beautiful impulse out. Broke past opposition. Very little time spent. Multiple time from correlation. If I can get back down to this 256.63, or even better with the 2 zones overlap at 255.66, that's an interesting position. As far as this one, man, I can't take it. It's right on top of supply, and there's nothing I want to take off the supply zone. It's already 2. So really, that's all I have on coin, man, is that 256.63. I know, right, user? I mean, it's almost like they don't understand what I'm doing here. Like, the whole reason I do this is so people can learn more about us and register for our workshop. So it's kind of insane to me that they're like giving us such a hard time, because that's why we go live. It's so we get more followers, so we get more members, and so on and so forth, right? That's how we get people to join us. They see what we do, and then they say, hey, these guys are actually good at what they do, and then they become members. So it's kind of weird to me that they're like, no, you can't ever mention anything besides us. And it's like, well, dude, I don't sell anything on your program. That's the whole reason we go live. So I don't know. But whatever, man. They've been weird lately. So let's do that. I'll switch on to the other profile there for TikTok, guys. Yeah, let's just switch over to the other profile, Dre. Just come on over. I'll be on there like a second. I'm just going to literally switch over there, and then I'll be on. All right. All right. I'll see you guys in a second. For you guys over there on YouTube, you don't need to worry. I'm just switching over here, guys. How's the audio over there on YouTube, by the way, guys? Is the audio good? All right, there we go. And we're live again. All right, so done with Coinbase. On to Tesla. Tesla. What's up, crypto? How you doing, man? All right, let's go look at Tesla here. What's up, Minj? TSLA. JP Morgan? No, I haven't done JPM. We can do it. It's good, Caesar? Cool. JPM. All right. So Tesla for me, man, I mean, we're chilling in this demand zone, right? And for me, this is so close to supply that I'm not going to take any trade off of it. Maybe if we drill down to like 4, maybe we can tighten up structure a little bit. Nah, not really. It's not helping us at all. I don't have a good position on Tesla right now because I wouldn't take a long here because of the risk reward ratio. Like the last good trade on Tesla was this one. That was the one we had been waiting for a few weeks for, right? For it to come back into. You text me? Okay, I'll check it out, Jen. And if you guys took that trade, I mean, that was a beautiful trade. That was a nice 11-to-1 trade, right? Came back in. Another great example of the type of trade I like, right, guys? You guys ask me all the time, what's my favorite type of trade? That's my favorite type of trade. That is daily, weekly, monthly correlation with a breakaway gap, first retracement back to the level. Like that's my favorite type of trade, right? So right now on Tesla, what am I going to do? I'm not going to take this short. It's already come back down and hit the demand zone. I'm not going to take the long. It's too close to supply. The risk reward ratio doesn't justify it. You know, there's just nothing there for me where we are right now, at least not in these time frames. So there's not a lot I would do where we are currently sitting in price. I would rather have better reward to risk ratios, right? And you can even see we're chilling here, right? We're sitting inside that demand zone, stagnating as it fills more of the orders. So whatever unfilled orders were left behind, these sellers pushed in, and there's a little fight here. I think there's probably enough unfilled orders here where it'll drive price action back up, but it's not worth me taking that trade. There's just not enough meat on the bone. It doesn't justify that long, at least not for me. You wanted to look at what on NAS 100? You wanted to look at like scalping? Is that what you said? I mean, I still think the same thing, man. Better to do this through futures. But we can look at it. But it's going to be better suited towards futures trading than this. What week do you want to look at? Give me a week. What's the week we're going to be looking at? You guys can choose whatever week you want. I did spot gold earlier, yeah. That was like one of the first ones we did, I think. We did it at the very beginning. Last week? Monday and Friday. All right, so that would be June 25th. I'm just going to mark off the edges of it so I know. Or June 20th, pardon me. June 20th through... There you go. All right. So there's my week. So if I was scalping, I'd be drilling down to lower time frames. And we're going to have to stretch. By the way, look at how terrible this is to look at like this. If you're going on low time frames like this, guys, stretch your screen vertically so you get better dynamic range between the candles, right? So you can see structure more clearly. So make sure to stretch your screen vertically the lower the time frame you go. All right, let's just mark off every level we can see here. So starting at current price, this little demand zone right here, impulse balance, impulse pay reversal. Well, current price from the end of the week, that is, right? Here you have a supply zone. You have an impulse up, balance, balance, impulse down, area of institutional selling there. You have another supply continuation right here, impulse balance, impulse continuation. You have a pay reversal right there, institutional selling right there. I'm just going to mark off all supply so I don't have to keep changing colors first. Impulse, oh, it's actually a little drop, base, drop right there, supply. Impulse, balance, impulse, drop, base, drop right there. Keep going. That was a little zone right here. No, no, no. Yes, that was a little zone right there. It's interesting because this one actually technically came out and then came back in, right? It's a little awkwardly structured. I mean, you could easily include all three of those if you wanted to, but realistically, that's the more proper structure. That's a tough one, huh? We'll look at that more in depth when we get closer. Little pivot reversal right here. I'm just marking off every hourly level I have for the entire week, guys. That's what I'm doing right now. Impulse, balance, impulse. No, I can do it just around that. There we go. Supply. Impulse, balance, impulse, continuation. Okay. Another pivot right there. We'll pivot right there. All right. All our supplies are done. Now let's draw all our demand zones. Lots of zones, huh? We have our demand right there. No, 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 no. Yes, that's a demand zone right there. We'll mark that green for institutional demand. And then no, 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 no. Yes, demand right there. No, 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 no. Kind of, but not really. Not really impulsed out, right? Little pivot reversal right there. That's valid. Demands are right there. No, 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 no. Yes. Little pivot reversal right there. No, 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 no. Not strong impulse there. I mean, technically there's kind of a level, but with that big long wick, that's not a level I would trade. No, no, no. That's definitely valid right there. Right? Got to include that leg out on a low time frame like this. No, 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 no. Impulse, bounce, 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 impulse, all that area there. All right. So we did this on futures, guys, and this is a good example of like when you're looking at these charts, when you're looking at low time frames like this, if you start being more selective with your trades, WM, I'll put on the list, brother. Sorry, I missed a bunch of comments, guys. I was looking at the charts. They shut me down. No, I just switched, Charles, because they were restricting our live. So if they're going to restrict our live, I'm not going to stay on that. It's just a waste of time, man. You know, like they weren't letting people see it. MNQ, MGC, gotcha, Matt. We already did GC, but I'll do NQ for you, brother. All right. So here we are. And the whole point of this example for you guys was to see the levels. So I just want to look at the level. So here I have impulse up, bounce, 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 impulse up, right? Sunbank bought heavily here, driving price action upwards explosively. If you were to just take first retracements to hourly levels, right? Furthest to the left, this one. A bunch of these zones are broken, man. But we're looking at from when they existed to when they were first hit. A bunch of these have been broken, right? If you were to take first retracements, would you have been able to generate a return? So let's just look at one at a time. So first one here came out. This was the first time I came back in. When I came back in, I hit the Enfield orders and I bounced all the way up to here. Was that more than a one-to-one move, guys? Was that move up to there more than a one-to-one move? Oh, I didn't know blue was live too. Blue was live too? Oh, well, you're saying in the regular class, in the trading, live trading. No, that was just coincidence, man. I have no idea. Yeah, that was more than 1-to-1. So let's just do it very simply. Let's just say we're +1. All right, so +1 so far. Cool. Then we have this little supply zone. Came back in, hit it, just broke through. We're back down to 0, right? -1. So back down to 0. Here we are again. Technically, it gapped and hit right immediately, right? But let's not say that. Let's say it came back in a second time here and then bounced. Was that move more than a 1-to-1? Easily more than 1-to-1. Was it more than a 2-to-1? Easily more than a 2-to-1, right? Where did it go to its peak? Right. Actually, I might have to drill down to the 15 just to make sure where that is, unfortunately. On that first retracement, but that's really the first, right? But either way, it came all the way up to here. Let's see what that level gives us in terms of total movement. Trying to mark it. Let me mark it. Let me get the zone. At its peak, it gave you, before retracing back down, a 2-to-1. All right, so now back to the hourly. So we're at a +2 off of this level before it came back in. So +2, right? This one wasn't hit in the time, so no trade on that one. We're +2 still. This one, impulse, balanced, impulse, came back in, hit, bounced all the way down to here. Easily more than +1. So we're +3, right? This one, impulsed out, came back in at the Enfield virus, popped up. I think that's +4, +5, but I might not reach a 2-to-1. Let me just see if it reaches a 2-to-1 at its peak here. +4, +5. So we're +5 with that demand zone. Gone. Supply came out, came back in, hit for the first time. Beautiful, beautiful long reaction, right? Even if you only took it to here, you still had a good trade, right? But if you took it and had runners, even better. But let's just say, let's go the more conservative route. Let's say you only took the first initial move before it came wicked back in here, right? Oops. Oopsie daisy. I chose the wrong one. Short position. Sorry. There we go. Even if you just took that first, what are we at now, guys? +5? Just down to the bottom of that wick. +6, +7. Can you see that? So impulsed out, came back in. Well, actually, no. Yeah, no. Came back in and then all the way down to +7. So we're +7 right now for the week. If you're managing the trades, right? This is taking into consideration that you're managing trades and taking profit along the way, right? Well, this type of talking in the face isn't the type that necessarily attracts people. I understand that this is more interesting for Phantom members, but for the general public, explaining trading in this manner is probably more confusing to the general public. Like if I wanted to attract more viewers, we should be talking about stuff like what institutional order flow is and things of that nature. That's just the reality of it, right? So +7. This one came out, came back in, just broke right through. So +6, right? This one came out. It did touch later on, but we're going to count what's within the week. Let's not worry outside of the week, right? So we're still +6. This one, this is an interesting one because for me, technically, I would have been considering that impulse out, and I would have considered weak impulse, so I wouldn't have traded it. But if you were going to trade it for that first retracement, it gave a reaction off that first retracement, and then it broke through on the second. So I wouldn't have traded it, and that's the way I would think of it. But, you know, that's up to you guys if you want to consider that, yes or no. If you were going to consider that, then you need to consider the wick of the leg out, and you'd be taking that, and you would have gotten about maybe a +2 on it on that first retracement right there. But I wouldn't have taken that trade. That impulse out is way too weak initially. This one came back in, hit the Enfield orders, popped up at least a 1-to-1. I think a 2-to-1. I think you got a 2-to-1 out of that, right? So we're at what, +6 right now? +6. At its peak, where did it go to? Another +2. So +8 right now. +8. This one came out, came back in, gave a little bit of bounce, but it didn't reach a 1-to-1, I don't think. No, it didn't reach a 1-to-1, a little less than a 1-to-1, and then it broke. So now you're +7. This one we're not going to count because it hit without the week. It worked, but whatever. The same way we didn't count the one that didn't work, we're not going to count that one that did work because that's later on in the week. So we're still at a +7 for the week. This one also hit outside the week, so we're not going to count it yet. This one came out, came back in, hit it. That was a big reaction, right? First hit there, boom, slam down. I don't know what that gave you, but that gave you plenty. All the way down to, where did it get to its peak? +8. Where we're at, +7. So now we're at +15. +15, taking a first retracement. This one came out, came back in, gone, +14. And then finally, this one's outside of the week. So if you just took first retracements to the hourlies, this one also outside the week. If you just take first retracements to the hourlies, you would have been +14 for the week. Did that make sense, everyone? In terms of what I just did there? You can choose any week you want, guys. Even like we chose one last week that was one of the worst weeks with a lot of fundamentals, and it still ended up net profit just by managing the trade, taking profit. This is why I say, like, if you're a little more selective with your trades, if you take first retracements and then you manage those trades, like take profit along the way and so on and so forth, you would that's what I'm explaining right now, man. You would take profit along the way. So what you would be doing is when you hit a 1-to-1, you would take some profit, right? You would close one of your contracts, move stop loss to break even. If you get to a 2-to-1, you move your stop loss for the remaining contract to a 1-to-1. You go to a 3-to-1, you move your stop loss to a 2-to-1. That's why I wasn't rounding all the way to the peak, right? I wasn't saying, oh, we got an 11-to-1 here. If it was like 10.5, we would take the 10-to-1, and then we would have the rest closed out at that 10-to-1. You get what I'm saying? So by trailing it with your stop, you're giving it the room to move, but then if it moves back against you, you're locking in the profit. Cool. Does that make sense? So take profit on the 1-to-1, lock in profit on one of your contracts. Like let's say you're just trading 2 contracts. Because if you're trading with prop, if you're going to be properly position sizing, you're probably going to be limited to 2 contracts, right? If you're just using like the basic, we calculated this once with, I forget if it was Top Step or Apex, one of the two, where it's like for properly position sizing, you'd really be trading at 2 contracts at most. So fine, take profit on one of the contracts. You could do trailing, Matt. You could absolutely do trailing. There's no problem with that. You could do trailing, just do zone structure for it, you know. And, you know, sometimes you'll have, like, you notice that other one that I said that moved more, but I'm not going to count it because we would have gotten wicked out on the retracement. Like, technically, there was one of the ones where I could have been more generous if we were a little less tight with our structure. But I'm just trying to say, even if you're just tight with your structure, just taking the profit as it moves towards these different profit targets, I don't like, I sometimes don't like showing this to the general public because sometimes this makes people think trading is too easy. And it's not that simple, right? But this certainly shows you how order flow is very important to trading, right? Yeah, of course. Absolutely, Minch. Absolutely. Yeah, everything's going to be relative to the position, stop, all that stuff. But you get my point. I was just, the 2 contracts, I was taking basically an average of saying like most contracts are going to be somewhere in that $200, $300 range. So I'm giving ourselves some room in that regard, you know. Obviously, how many ticks there are, all that stuff's going to affect everything. But it's a general good rule of thumb that you could probably trade at least 2 contracts and still be within proper position sizing without over leveraging your position. And then that's that. That's a nice way. If you can trade more, then I would do more. Like if I had more, I would say take a TP1. I would close another, shave off another contract at TP2, and then leave my third contract with a runner, you know? And so we're just taking this profit along these different levels, right? But that's a very bare bones basic way. Now, what's the downside of that? I mean, I deleted them all now, but those trades were all throughout the day. So, you know, it's like 24-hour day market basically. So are you going to be up 24 hours a day trading? I know I'm not. So that's the downside of it, is either you're there for the trade or you're not. That's just the reality of day trading, right? Because can you set limit orders for levels? You can, but you might change your perspective on whether you want to trade a level depending on how price comes into it, right? And that's just the reality of it. That's the reality of day trading in general. Day trading, that's why a lot of day traders will sit in front of the charts while they're day trading, right? Because trades can be set up. You'll miss a lot of trades if you just set it and you don't watch it. So it's just, that's the downside of day trading, is to take advantage of all these trades, you got to be there. And who wants to be there 24 hours a day, you know? So you can see Blue. I mean, Blue does a lot of day trading, and Blue will sit in front of the charts the entire day because he likes it, you know? Of course. Yeah, you improve your odds. As you start improving your odds, it goes better. You try to do that at the 800s NQ. And how'd it work, Matt? What's up, Zachelle? How you doing? Yeah, it works very effectively, guys. I've done so far every week you guys have shown me. We've just chosen a bunch of random weeks so far. I think it's the 4th one where we did the entire week. Every single one, every single week has been profitable that we did that analysis. Some were better, some were worse, but not one was losing. Now, does that mean every week it's going to be profitable? I doubt that. I mean, but I haven't gone through and checked every single week in the entire history of NQ, ES, and whatever. But I'm just saying, haven't found one that it didn't work in, you know? So it goes to show the importance of understanding IOF. Even taking the losses on the losing trades, even doing all that stuff, it's like, yeah, still net gain, you know? Just with bare bones basic stuff. That's why it's so important to just understand IOF before anything else. All right, let's go check out JPM. Still worked. Stop the 775. Yeah, that's cool, Matt. Yeah, if it still worked, that's awesome. I mean, guys, you know, I don't trade a lot of futures, right? Because of the time-consuming aspect of it. But I even did one with the 15s, which I'm putting into the prop course for you guys to see. And when I did all the 15s for a week, it was obviously a lower win rate. Like when I did the hourlies for the week, I just chose a random week. And when I did the hourlies, it was like 10 hourly zones were set up in that week on NQ or ES. I don't remember which one. I think it was NQ. And like 7 of the 10 zones had been triggered within the week. And then like 6 of the 7 were winners, like giving you at least a 1-to-1 or more. When I did the 15s, I think it was like something like 30 zones had been set up or something like that. And I remember like 20 something of the zones had been triggered. And it was like 3/4 of them were giving you at least a 1-to-1. So obviously lower zones, more of them broken, but still enough for you to be profitable. So it just goes to show you like how important IOF is, which makes sense. If you understand where banks and institutions are buying and selling, that's going to help you in trading, right? I mean, not a lot here for me to do, Jen. We're at ATH. What do we have on the weeklies? Nothing on the weeklies. Nothing on the dailies. I don't have structure, man. I need supply. I don't have a target. I need a target for me to take a trade here on JP. So I have a whole lot of nothing right now, brother. There's nothing here for me right now. Cool. We need a pullback. You have plenty of demand. There's no lack of structure on the buy side. We don't have structure on the sell side. I mean, I don't trade without a stop loss, right, man? So I'm always have my stop in there ahead of time. My question: why is weekly and daily didn't hold? Oh, which one? I mean, any zone can always break, but this one, this level right here. Well, and the way we were doing it is based off structure, right, man? So no matter what, the losses wouldn't have outweighed the winners. I mean, it can happen, right? That's just the reality of the markets, man. Nothing's guaranteed. At the end of the day, all we're doing is probability analysis, right? So any zone has the potential to break, right? That's just the reality of trading. There's never a guarantee in trading. If you look at it more in detail, you can actually see that you had this daily, right, where you hesitated, broke through, and then you formed another daily right here. And then here, you gave a little bounce off the daily. You gave a second little bounce off the daily, and then you broke through. So it did give you a reaction. It just didn't hold. Well, I'm overlapping. So this is the weekly, and those are the 2 dailies. All right, let's eliminate the other daily so it makes it easier to see. Daily, weekly. Daily, weekly, bounced. Daily, weekly, bounced. Third time broke. So it gave you a reaction. It just didn't hold. Right? But you did get a reaction. In fact, in total, your reaction was at its peak. If you just took that daily right there, right? At its peak, it got down to over a 1-to-1. Right? And then you even gave you a second chance for another 1-to-1. Even here, and second time gave you more than a 1-to-1 as well. No, I understand, but you get what I'm saying. Like, it gave you a reaction. It just didn't hold beyond that. Now, perhaps the better question is, would we have been willing to take the trade? Sure. There's only demand down here. You have enough room to take the trade short, right? But if you manage that trade, right? Like, let's say you manage a trade, and when it hit the 1-to-1, when it hit here, what if you shaved off one of your contracts? You got what I'm saying? So as soon as it hit that level right there, you close one of your contracts, move stop loss to break even. So you manage the trade. Now, when it came back in and hit the second time here, you would have gotten stopped out on the second one at break even, and you would have locked in a 1-to-1 on the contract you took. Yeah, exactly. And that would have been it. But on the second one, you would have been more cautious with it, because on the second hit, what am I going to be doing? Counter trend, second hit. What type of entry am I going to be looking for? I'm going to be looking for a confirmation trade. And by the time a confirmation trade was formed, which it did form, it gave you the confirmation, right? When this red candle closed, that gave you the confirmation. I would have been evaluating, well, what's my risk to reward ratio if I'm going to take it right here, stop us at the top of the zone, and profit target down here to this demand zone. I've been looking at a 1.5 to 1 reward to risk ratio. So is that second hit worth the confirmation? I don't know if it needs a shell. Yeah, it's okay. So let's just think about it from this way, Jen. There's nothing wrong with having a loser. That's why we have stop losses. But if we treated it a little bit differently, if we practiced proper trade management on this trade, it would have been a winner for you, right? It wouldn't have been a big winner. It would have only been a 1-to-1, but it still would have been a profitable trade for you. You would be up on the trade. You wouldn't be down on the trade. So if you just follow the rules of essentials, right? That's why it's essentials. If you just followed the rules of essentials and you took this exact same trade, you would have had a profitable trade. Does that make sense? Hence the importance of essentials. Cool. So I don't mind the level. I think it was a good level. I think it was a good trade. You should have locked in a 1-to-1. You were hoping for more. I got you. It didn't work out that way, but at least you would have locked in a 1-to-1. Nice, Matt. That's awesome, brother. Does that make sense, everybody, what I just explained? I know some of you guys, we may have some people in the room that aren't members, but I think we're mostly members. Is anybody in the room not a member right now? I think it's mostly members right now in the room. So I don't think we need to worry about anything for people that aren't. I don't think we have anybody that's not a member in the room right now. Is there anybody in the room that is not currently a TradePhantoms member? Let me know in the chat. If not, that would have made no sense to you. But if you're a member, everyone in the room should have understood that as long as you've completed essentials already. If you haven't completed essentials, then obviously that's what you're going to learn in essentials. All right, done with JPM. On to NQ. Let's go check it out. Let's go look at some NQ. NQ. Oh, the face is not a member, so there you go. So that won't make sense to you, the face. But for everyone else, it should make sense. Not a lot for me to do here, brother. ATH. Gotta wait for new zones. Gotta wait for new supply. Nothing to do at ATH. So that's it for NQ, my man. Oh, welcome aboard, Steven. Did you just join last night? Awesome. Welcome aboard, my man. We'll give you a call today. Are you, because we had a few members that joined from overseas as well. Are you in the US or are you overseas? I wouldn't do that, Minge, because I can't predict where a bank's going to start taking profit. All right. Any other tickets you guys want to check out? Let me know if you guys have any other ones you want to check out. BBAI? All right, let's go do BBAI. BBAI. Let's start from scratch for people that are new so they can see structure. Clear it all, start from scratch. All right, so here we are on the monthlies. First things first, what am I looking for? You're in the UK. Do me a favor, man. I'll shoot you an email after this live because we had a few people from the UK that joined last night. So I'm going to shoot you guys all an email with my cell phone. Do you have WhatsApp? I'll shoot you my cell phone number so you can just add me on WhatsApp and then we can communicate that way because that's the way we deal with all our international students. FDAX? Sure. It's out of here on the list, man. FDAX. I don't know what FDAX is, but we'll check it out. Awesome. I'll shoot you my cell phone number. I'm just not going to do it here because we're still in public, man. A-Man and Tesla, EU. Gotcha, Niche. Gotcha, Vincent. Gold we just did, Matt. We already did the gold. We did it back here, brother. Or do you want to do a different gold? So EU, A-Man. Tesla, I didn't have anything new, brother. I didn't have anything new on Tesla. We did it earlier. There's no new structure for me. The last trade on that was that demand zone. Oh, gotcha, Minge. All right. So first things first, guys, what are we looking for? Institutional order flow. Where are the major banks and institutions buying? Where are the major banks and institutions selling? CART, is that the ticker? I don't know, CART. C-A-R-T. Yeah, IOF. Always start with institutional order flow. Now I have a strong impulse here, right? But it's still active. Do I think it will hold? I think it will likely hold. We're getting towards the end of June, but we don't know yet. So we're going to draw it tentatively. And unfortunately, because this is a base as well, I'm going to have to include both of these guys in here. So I'm going to put a yellow border around this zone because this candle is still active, right? We don't know what's going to happen before the end of the month. So we're not going to assume that it's going to hold. The level that is fully closed is this one down here. I have this beautiful impulse in, balance, impulse out. Some big banker institution bought heavily here, driving price action upwards explosively on Big Bear, right? Nice, strong imbalance in order flow driving price action up. But this is the question for anybody who's new in the room. This is the question that matters. When this financial institution bought here, did they fill all of their orders? Were all of their orders filled when they bought down there? What do you guys think? Did they fill all of their orders? No, right? Why are we able to say that just by looking at structure? Well, it comes down to what price action is, right? Price action is simply an imbalance in order flow. For price to rally, for price to go up, there has to be an imbalance of more buyers and sellers. Always and forever, zero exceptions to that rule. That is what price action is at the end of the day, right? Price action is simply imbalance. So if you see price impulsively going up out of equilibrium, right? Buyers and sellers were in equilibrium, and then price impulsively rallied up. What that's telling you as an analyst is that there is an imbalance of more buyers and sellers here, causing that reaction in the market. Conversely, if price drops impulsively, what does that mean? That means there are more sellers than buyers. The only way price can go down is if there are more sellers than buyers, causing that reaction in the market. So if there are more buyers and sellers, price goes up. More sellers than buyers, price goes down. If I have equal numbers of buyers and sellers, what happens to price? Well, it doesn't really move, right? If I have equal numbers of buyers and sellers, that means buyers are buying, sellers are selling, and price is not moving. So we form small body basing candles where the open and close price has not changed very much, right? Very small movement between the open and close price. You can have extremes in the day or the month or the week, whatever time frame you're looking at. But in terms of between the difference between open and close price, small bodied basing candles, right? So that's all you're seeing on charts. When you're looking at charts, all you're seeing is either you're seeing imbalances of more buyers and sellers driving price action up, imbalances of more sellers and buyers driving price action down, or equal numbers of buyers and sellers moving price to the side. Cool. Is everybody with me on that? Give me yes or like if that makes sense to you, right? That's all price action is, either balance or imbalance. So that's step one, just understanding what price action is. Why is this likely institutional? Well, the reason this is likely institutional is it comes down to the amount of capital required to create such a large imbalance that we drive price action this impulsively, this quickly on Big Bear, right? Big Bear at the end of the day is a $1.7 billion market cap. For you to cause Big Bear's price to shoot up this quickly, this impulsively, you have to be creating a very large imbalance in order flow, right? There has to be way more buyers and sellers. If we came along and we bought 100 shares of Big Bear here at the limit price of 165, right? Is that moving the price of Big Bear? We put $165 into the trade. Is Big Bear's price shooting up because of our big order of 100 shares? Absolutely not, right? 100 shares is nothing. What if we bought 1,000 shares? Still no, right? Because in comparison to the 1.7 billion market cap, that's a drop in the ocean. But if a big investment firm comes along, if a Goldman Sachs comes along and decides that they want to buy 50 million shares of Big Bear, well, that's a big order. That means suddenly out of the blue, we have way more buyers and sellers. And whenever there's an imbalance in order flow of more buyers and sellers, that's going to cause price to go up. Conversely, if they decide to sell a large position, they decide to sell 50 million shares, that's going to create an imbalance of more sellers and buyers and drive price action down. Is everybody tracking with that? I know we have a few people that are new. That's why I'm explaining everything, guys. So for anybody who's new, are you with me on that? Does that make sense? For you to cause significant price action in the markets, you have to be creating very, very large orders, which drive major imbalances in order flow. And the only people who are really capable of placing orders of that magnitude are the large banks and financial institutions. So that's why we're able to look at this and say, this is very likely a large institution buying heavily, driving price action up. This is very likely a large institution selling heavily, driving price action down. Why do we care? At the end of the day, who cares? So what? They bought in the past, they sold in the past. Well, how does that help us as traders? Well, the reason professional traders start by identifying institutional order flow is because most major price action is driven by banks and institutions, but more importantly, they place such large orders that not only do they create imbalances in the market, they also end up being left over with unfilled orders sitting behind at the level. So if they place a large order, if Goldman Sachs places an order to buy 50 million shares here at the limit price of 165, they can put the order into the market. But just because they put the order in doesn't mean there's going to be 50 million sellers sitting there. In fact, that is very, very unlikely. So what typically is going to happen to financial institutions is they'll place these large orders and they'll fill some of their order based on the liquidity available in the market at that time. So if Goldman Sachs places an order to buy 50 million shares, but there's only 30 million sellers sitting here, then the most they can buy is 30 million shares. You can't buy more than what's available. And so they will. They'll fill as much of their 50 million order as they can. But then at the end of the day, they're left with this huge pile of unfilled buy orders. In our scenario here, 20 million unfilled buy orders. And anytime I have an imbalance of more buyers and sellers, that's going to cause price to go up. So if price comes back to these levels, that's where we're going to study an opportunity. And you can see it right here on the supply side. Some banks sold here, driving price action down, leaving behind unfilled sell orders. So when price came back in and hit that level for the first time right here, because there was that big pile of unfilled sell orders sitting behind, it hit that imbalance of more sellers and buyers and it rejected back down, right? That's what you're seeing happen right there. Can everyone see that was the impulse structure out, came back and hit the unfilled sellers and rejected out? That's where we're looking for entries on trades. It's identify where the banks buy, identify where the banks sell. Don't chase price and get caught in traps. Instead, have the patience to wait for price to come back so you can take advantage of the bank's deep pockets, take advantage of their unfilled orders, and sell with them. Or if it comes back down here to institutional buying, buy with them. Cool, cool, cool. Everybody with me? So far, so good. All right. Anyway, got our monthlies done, down to the weeklies. Big, big, long wick. Yeah. And things to take in consideration anytime you're seeing stuff like this also, what I was talking about before. If you have an asset that was recently IPO'd, like I don't know what month this was on. Let's go back to the monthlies just to make sure. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's the 13th month. So that might be the first month where they were allowed to sell. And it had a lot of turmoil that 13th month. 13 is a weird number to sell on. That's a weird number to sell on. But so I would make that more institutional than just being allowed to sell for the first time. But anytime you have a recently IPO'd stock, you always have to take into consideration when early investors are first allowed to sell. All right, here we are on the weeklies. First thing I want to evaluate on my weeklies is my current trend. What's my current trend here in Big Bear? Up, down, or sideways, guys? You guys tell me in the chat, up, down, or sideways. What's happening here? Here, I'll stretch it a little bit easier so you guys can see it more easily. Oops. Oh. Thank you for the likes, guys. Appreciate it. It does help boost us here with the algo, so we appreciate the help. Yeah, it's an uptrend, right? We're establishing higher highs, higher lows, higher highs, higher lows, higher highs, and we've broken past any control point on this previous downtrend. So what does that mean for us as traders? Just means ideally we'd like to go long. We would rather trade with the trend than against the trend because trend trades are higher probability trades. Do we have any order flow here? Yeah, we sure do. We have this pivot reversal right here, little impulse in, balance, impulse out. It has already been retested once because we gapped out and retested. So that's an area of institutional demand with multiple time frame correlation. And then here it's a little bit more difficult to structure, but you have an impulse up, then you have a drop down, balance, 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 rally up. So that little gap there between the close and the open here would be our impulse in, balance, impulse out. And that's our most recent level. You can actually see it's a retest of that continuation over there. On the sell side, do we have any clear institutional order flow? Well, I have this clear pivot reversal, but I'm going to look over to the left to make sure it's not a retest. And if I look here, I can see I have this rally up with the gap, balance, balance, big drop down, right? So that's institutional selling there. And that supply zone, if you look at it, not only is that weekly, monthly correlation, zones on top of zones, which we love multiple time frame correlation because it forms stronger levels of imbalance, but you can see price impulsed out, came all the way down to this demand zone, hit these unfilled buyers, got pushed right back up in supply, hit the unfilled sellers for the first time right here. So that was actually the first retracement. And first retracements are typically where we're looking for entries. That was the first hit to the zone. That was the first time after exiting that we came back in and hit that massive pile of unfilled sell orders right where the weekly and the monthly overlap each other, stronger levels of confluence, right? Hit that big pile of sell orders. And because there were more sellers than buyers, price went down. That's where we typically look for an entry. We came in a second time and hit it again right here, right? We can see the second time we hit it right here. But for us, we typically like first hits, not second hits. Sometimes second hits are okay, but first hits are usually our preference. On the second hit, we created a little bit of zone creep. So you see how on the second hit, we created another zone here, impulse up, balance, impulse down. This new zone is slightly lower than the previous zone. Now we will take that into consideration for future potential trade opportunities. No thanks, man. I don't want to do a live together, brother. Guys, I don't accept any invitations. You guys have been sending me a bunch of invitations to do a live together. If I don't know you, there is 0% chance that I will join in the live with you. I'm sorry I haven't mentioned it before, but no need to send me invitations for lives, guys. I don't want to do a live together. That's awesome, Mason. Nice, man. So institutional selling, institutional buying. Let's drill down to the dailies here in Big Bear and see what the dailies give us in terms of structure. So here I have this very interesting impulse, balance, 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 impulse. Interesting that we gapped out from it, but it is what it is. We don't love the gaps out from the base, right? But that is institutional demand there, and that is daily, weekly, monthly correlation. We have the daily here, we have the weekly right here, and we have the monthly right here in the background. The monthly is still tentative, but either way, daily, weekly, monthly correlation. All three zones overlap each other at the 4.02. The top of the daily is at the 4.13. So that's a potential opportunity to go long if we can get back down there. On the sell side, if you look at current price, we have this impulse in, balance, balance, impulse out. We have what looks like institutional selling here. Are there any considerations I should have with the supply zone, guys? Is there anything I should take into consideration with the supply? Just based on the structure. Great example of why you track the week, Mason. That's excellent, man. Right? Never get bogged down in days, guys. You can have winning days, you can have losing days. But track your progress on more of a weekly basis. That'll probably fare you better. Yeah, it's hit already, right? What's up, McKinley? Exactly right. We impulsed out and came back in and hit it right there. That was the first retracement. So now we're back into this zone, but it's the second hit to the zone. Oh, I'm sorry. Second hit already happened here. It's the third hit to the zone. That was the second hit right there. This is the third hit. For anybody who's new, can you see how because a bank sold heavily here, driving price action down, leaving behind unfilled orders, every time price comes back in, it hits the unfilled sell orders. And because there's that imbalance of more sellers and buyers, it gets rejected. And more sellers and buyers and rejected. And now we're in for the third time. So we're starting to beat up the zone. Because every time I hit a zone, I'm filling more orders and I'm leaving fewer unfilled orders left behind. Pretty rare for me, Minge, but sometimes it can absolutely happen. The way I trade, it's pretty difficult for me to have that because I'm very conservative with my VAR, right? But it can happen. It's not impossible. It just doesn't happen that often for me. Losing days, all the time. Losing weeks, more difficult. Losing months, can't remember the last time I had a losing month. If only I didn't take the 2 dumb news trades. Fundamentals got you, Mason. BPG. What's BPG saying? Anyway, so super beat up on the supply side. We're not willing to take a supply on a third hit, but this demand's not bad, man. I'd be interested in this demand at the 413, or better yet, where the monthly, weekly, daily all correlate at the 402. That's what I'd be looking here on Big Bear. Cool. It's more about my risk management, man. It's just I don't leave myself very exposed. I wouldn't even say it's about my experience. It's that I don't really take big losses. So I don't really have to dig myself out of big holes because I don't take big hits. You know what I mean? Like for me to have a losing week, I have to lose way more trades than I win. So it's not like it's impossible. It's just more difficult because of the way I structure my trades. The more conservative you become with your VAR, the less you have to gain to make back any losses, you know? I mean, we're at ATH here on the monthlies, man. Oh, gotcha, Mason. That's tough, man. Correlation across different industry. Well, not different industry, but, you know, different companies and how that could affect. I get where you're coming from, but that's more speculative trading, right? But I like the concept, man. I mean, I'm usually active in more trades than that, man. But I mean, if I had a situation, I can't imagine a week where I would only have 2 trades the entire week. But that would certainly be possible. You know, anything's possible. As far as I know, Mason, I can tell you because I'm here in Austin. Uber has a deal with Waymo, and Waymo is the same thing. It's driverless taxis, right? So I don't know that Uber is overly concerned about Tesla's robotaxi because they also have a driverless car, and they've had it going here in Austin for longer than Tesla has. I've had this for a long time, Dave, but I did that because Green wanted to start doing lives and stuff, and he does lives differently. So like the way the algo works, if I do a live on the same channel as Green and the same channel as Blue here on TikTok, it doesn't figure out our audience because the way I speak tends to speak to a different audience than the way Green speaks, and that tends to speak to a different audience than the way Blue speaks. So generally, it doesn't work out very well if we all use the same thing because the algo can't figure out who our audience is. I mean, right now you can see I'm in TikTok jail right now, man. I mean, look at how many viewers we have in the room, you know. So, but I've had this for a long time. It's not a new account. I've also had it because every once in a while TikTok will do this to us. It'll just stick us in TikTok jail, and I don't know why, man. Sometimes they just really dislike us and give us a hard time with any lives we do, and they don't promote us. Like I saw a guy that had like 500 followers. He had like 300 something people in his room, and he was teaching how to use an EMA. And I'm like, well, that's rough, man. Like, I trade professionally, and this guy's teaching something that you can learn off, you know, the big red button. And that's just the reality of it, man. You know, algos sometimes like you, sometimes they don't. Daily got 4 got broken early in the week, which got a surprise. Yeah, I got you, Mason. I appreciate it, Dave. Hopefully, man. I don't know. I'm just looking at it as like we got to figure out different ways to get new members because I mean we have a high retention rate with the members who stick with it, right? I've kind of started like now that we've reached past the 2-year mark, I can see that the people who stick with us are the people who stick with trading because it's like if we get you to profitability, most people are like, why in the world would I leave? You know, the people that I have the hardest time are the people who give up quickly. And it's just a matter of getting them to actually do the work, unfortunately, you know? And it's one of those things where I was actually talking about this the other day in a live, like I can kind of gauge now. I think I have enough statistical data that I can kind of gauge if somebody's going to give up before they give up, you know? And I don't know if me saying to you, hey, you're on a, like if somebody was like showing the traits of somebody who's not going to do the work here, I don't know if me telling that person, hey, you are in a current state where you are more likely to quit in the next month or two than the majority of our members. I don't know if that's something they would actually like, or if that's something that would kind of, because sometimes people can take that the wrong way and be like, how dare you, you know, it just depends on the person. So I don't know. That's one of the things I'm thinking about, whether it's worth me telling people like, hey, you're on a bad track. It's likely you're going to fail with this unless you change things. Or if they'll be like, thanks for letting me know, man. I don't know. Because I think there's a little bit of personality in there too, you know, and the reality is not everybody's going to be successful in life. You know, the biggest difference between successful people and unsuccessful people is successful people take action, and unsuccessful people, for lack of a better word, make excuses, you know, or as the term I came up with the other day, employees make excuses. Which sounds mean, but that's where you end up being, right? Oh, I got you, Wicked. Yeah, man, I wish, man. We don't handle our merchant services. It's all done by Shopify, right, brother? So I don't have a way of setting up a whole separate merchant services just for crypto. I actually like trading. I can do something else and make double trade. Yeah, 100%, Mason. For me, I think it's crazy. I mean, but you know, I understand that just because that's my interpretation, that doesn't mean. Well, anyway, let me finish up here on FDEX. I don't know if there's any structure here. Oh, there's structure on the weekly. I got you. Okay, so here we go. We got sidetracked here. I don't have time is the most common excuse, dude. I feel like making a t-shirt that says I don't have time. I could be like, hey, here's your parting gift for quitting. You've been really busy, huh? Couldn't carve out any time, 24 hours a day, 7 days a week. It's impossible. It's the most common excuse I hear when people give up. It's, I really love the program. I just haven't been able to dedicate the time towards it. It's like, you mean you haven't made the time to dedicate towards it? Because that's the real reason, right? But that's where it comes down to. Yeah, you got to have more motivation than just money. It's got to be actually important to you. Well, that's the thing, Mason. That's how I would get like a negative review if I started saying that ahead of time. People wouldn't like that. I can predict what they're going to say. But if I said like, must be really busy lately, right? A lot of things going on in your life. Then they'd be like, these guys are, you know, a-holes or whatever. We're calmer and smarter rather than hard. Yeah, I mean, dude, I went through it, so I don't have a lot of pity for people that give up. Like, I worked a full-time job, man. I understand the work that goes into trading. Like, I've gone through it. So, like, I know what goes into it. I understand how much work it takes. I understand that it's not overnight. But if you're serious about it, you can learn it, right? I mean, at this point, the one thing I can point to in terms of Phantoms is we have a proven track record. Like, we have enough members that consistently make money with trading with us. We have enough members that are full-time traders, right? We can point to people that have gone through and come out the other end. So it's not like theoretical, right? Now it's just a matter of, are you going to do the work? And if you're going to do the work, awesome. It's part of the reason I'm thinking of whether I should eliminate monthly subscriptions. But then if I eliminate monthly subscriptions, it makes it more cost prohibitive for a lot of people, depending on where they are financially. And all of a sudden, even people that might do the work, maybe they can't afford it, you know? But like, my thought with it is not about the money. It was to try and get people who are more serious, you know? So that's the reason I haven't done it, because I'm like, I don't want to take away the ability for somebody who might just be more financially tight to be able to do it, because they might be just as serious as somebody who has more money. But then I'm also thinking about the commitment level, you know? So that's what I've been trying to gauge. What's the smarter route? Because I do want to make it accessible price-wise to everyone. That's always been my goal with Phantoms Pro, is to make it very inexpensive. I consider it to be inexpensive. I hope you guys do as well. That was the whole point of the price point with it. But hopefully that would help me weed out some of the people who are just, you know, the golden nugget hunters, as I like to call them, the people who think they're going to like pick up some secret trick and like learn to trade because that was the one trick I needed. It's like there's no trick, dude. It's a skill. You develop it over time. You're not going to be instantly a genius trader, you know? Hold on a second. I have to prove I'm not a robot. 1 second. I'm not a robot. Life force energy. I like it, Matt. When you come, Tyler, let me know. Oh, I can't wait, man. I'm looking forward to it. JetBlue? Sure. Let me put on just a guy. I mean, we're going through charts pretty quickly. I'm feeling pretty good about it. Yeah, I think I would get, you're saying like for like what, like for lifetime membership, Wicked? Is that what you're saying? There you go, Mason. I've been thinking about that. We might come out with something like that. I think it's something because the reality of it is there is an ongoing cost. Like it does actually cost us money to host every month. It's not free, and I actually pay per user. Like Livestorm's not free, right? Livestorm charges me literally per user. So that's one of the things I've taken into consideration if I do lifetime membership or unlimited membership, that there is an ongoing cost associated with it, you know? Or I'd have to switch to a different type of server that didn't have a cost associated with it, you know, like a Discord or something. But let's be honest, Livestorm is better than Discord. Like it's a better platform, you know? Oh, now I just mentioned a platform, which means now it's going to be flagging me here, right? Where's it coming? I'm going to get it in a second. It's just a matter of time now. Mr. Blue's gone. Dude. Yeah, exactly. Yeah. It just didn't work as well for me, man. It was less stable. I mean, we used it many, many years ago. It wasn't as stable for us. So stability was always my concern in terms of platform use, you know? Anyway, all right, let's keep going here. So we got the dailies here. Obviously, we're higher highs, higher lows, higher highs, higher lows, higher highs. So we're in an uptrend here. Let's see if the fours give us something actionable here on DAX. And on the fours, I do have correlating structure right here. Look at this. This looks like a little impulse, balance, impulse, continuation. Big long wick hanging out on that base, though, huh? Oh, 100% Minge. Dude, it's been really tough lately, Dave. Like, they've become really, really stringent with certain things. Like, it makes it tough to use it, you know? But at the same time, it's where we found the majority of our members, you know? So it's tough because, like, that's why I'm trying to build up these other places, you know? Because at the end of the day, dude, we just can't count on these guys. They're so unreliable with us, you know? And like every once in a while, like, I mean, just 2 weeks ago, we were having like 200 plus people in the room. And then just from one day to the next, you know, like 50 people in the room. I mean, I did live abroad. So yeah, Minge, I lived in Brazil for a while. Not only did I consider it, I did it. I lived in Brazil for several years. And I really enjoyed my life down there. It was very good. And the reason I moved back was because of safety. Yeah, that's the best way, Michigan. I mean, we teach it, Pan. If you want to learn more about it, if you go to this place right here, right, and go /TradePhantoms, on Tuesdays and Thursdays, this Mr. Blue, he does day trading analysis. I primarily swing trade, but I can explain to you day trading if you want, and we can certainly do day trading analysis. But if you want to see one who actually worked as a day trader on the floor, you can check him out Tuesdays and Thursdays from 8:45 to 9:45. If you are a beginner, then I would recommend hanging out more with me than with him at this point. you You will probably do better with me than with him if you're a beginner. I'm just being straight with you. Like I was about to say, but unless you're an experienced trader, probably a lot of this is going to be way over your head. So if you're brand new, maybe not so much. Check this out because that'll scare the living daylights out of people that are new. I'd say most people would get scared, right? If you want to learn more about trading, Pan, what I would recommend is this. Come to, if you go right here in our bio and you click right here, it'll take you right to this place. I can't say it because there are things I can't say on this platform. And you can register for a workshop. I'm teaching a free workshop next Thursday at 7 p.m. Eastern. And in that workshop, we'll teach you a lot more about trading in general. So we cover a bunch of stuff in the workshop. We'll get into how the markets really work because most people don't really understand market movement and how it moves. We'll teach you about how professionals trade. All of us were professional traders. So we all worked in the industry as professional traders. We'll teach you more about how we identify institutional order flow, which is the foundation of how professionals trade. And all that is I'm loving Texas, Matt. We're identifying where the banks and institutions buy and sell to see if we can buy and sell with them. So that's how professionals trade. Because if you ever worked in the industry, you're well aware that banks are in control of most major price actions. So when we trade, we try and trade together with the banks and institutions, right? How to trade in all directions, whether the market is bullish, bearish, or consolidating. How to use the leverage properly so you can reduce your risk, generate higher rates of return. The difference between all different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it, man. It's free. It costs nothing. And if it's something where you're actually interested in becoming a member, you're in a room with almost exclusively members right now, brother. Like almost the entire room you're in. I think pretty much like 2 or 3 people are not members in the room right now. I think everyone else is a member. Is that right, guy? Who's a member in the room, guys? Give me a yes if you're a member in the room. Yeah, don't click a blue video unless you're a couple months in. Did I ever visit the favelas? No, man. Why would I want to go to the favelas? That's terrible. Those are not pleasant areas to visit. Awesome face. Yeah, man. And again, I'm live most days. So if you want to just learn more about chart analysis, you can hop on any of the lives and we'll teach you more about it. 100% agree with Kenley. I think we've definitely built the best trading community that there is. And I'm still working to improve things either way. By the way, I think I gave some of you guys a sneak peek, right? Oops, I'm now logged out of it. Is it not going to let me log back in? I think I have to log back in. I don't know how to log in. Whatever. I was going to show you the sneak peek to the new portal. We're not expensive, Michigan. We're pretty inexpensive, brother. So one of my friends, he was actually awesome, Doe. Welcome aboard, brother. One of my friends, he was actually the buyer. He was the guy who developed, pardon me, he wasn't the buyer because I'm sure they have more than one buyer. He was the guy who developed the buying system for BlackRock's real estate leg. So he was like a real estate guy and he actually developed their buying system because they don't buy real estate the way like we do. They don't go and like check out the property and do the stuff. It's all automated. And they have a whole algorithmic system to determine which ones they want to buy, which properties they want to buy. And so he is the guy I call when I have questions about real estate because he knows way more about real estate than I do. Like I don't know a lot about real estate. I have my investments in it, but it's not my forte. Oh, 100%, Matt. That's also nice. But it's all, for me, the way I'm structured, that's not my biggest concern, brother. My biggest concern is just my wife was tired of the cold, man. Although now we're in the super, super hot here in Austin. So, we'll see how that goes. Thank you, Kenley. Appreciate it, brother. But so anytime I'm going to buy a property or things of that nature, I always ask him to check it out, and because I'm like, he's more a real estate guy, I'm more of a trader. He asks me for help in his trading investments and I ask him for help with the real estate, and that's our deal with each other. Anytime I have any sort of real estate investment, he's like, let me look at it. And I send him everything. He's like, yeah, that looks good. He's like, oh no, look at this. This is what you don't, So he'll teach me more about how to properly invest in real estate. And then I teach him more how to properly invest in the financial markets. And it's a nice symbiotic relationship that we've had for 8-9 years now, something like that. Yeah, it's been a while, but it's cool. Anyway, what can we look at here in FDAX, man? I mean, the issue is going to be risk to reward here. It's not the levels per se. It's that we're very close to supply. So like, I can't take this demand because there's not enough meat on the bone, right? My risk reward sucks. Can't take this one. Not enough meat on the bone. Can't take this one. Not enough meat on the bone. So my real issue here is going to be risk to reward more than anything else. On the supply side of things, not really structured there. There we have a little bit of continuation, impulse, balance, impulse. It is red, red, red. And we are on the 4 hours, and we wicked through it on the leg out. I mean, even if you're going to take that level, man, it's only going to be a confirmation trade. So maybe a confirmation of 24,273 to go short. On the buy side, it's too close. We're too tight. Even this little pivot reversal has already been hit right here. Can you see that? Impulse in, bounce, 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 impulse out. Nice 4 hour daily correlation right there. Came out, came back in. I mean, look at how precise that is, guys. How much more precision can you have in terms of a trade entry? Look at that. Came back down, hit right where the zones overlap each other. Hit those unfilled buy orders and just rallied up just like that. Boom. All right. That was truly your last actionable trade here on FDAX. Cool, cool, cool. Nice, Mason. That's cool. Where did you leave before when it was cold? I was in Massachusetts, Minge. I was in Massachusetts, brother. Cool, cool, cool. All right, FDAX done. Done. And for anybody who's new, guys, if you want to receive alerts when we go live, if you go here to this place right here, and you click here on membership plans, if you click on this one, this is our free alerts group. It uses this program. It's so weird speaking this way. It uses this program, and all we send here, I only send alerts when we go live. I don't send anything superfluous here. We're not going to hit you with a bunch of stuff. All I do is I send you when we go live. So if you want to know anytime we go live on social media, that's the way you can know. Cool, cool, cool. Yeah, we trade everything, yo. We trade all asset classes: stocks, options, futures, forex, crypto. We trade it all. Yeah, exactly, Minge. I gotta speak in vagaries. I gotta speak in very unique ways. You go to this place and you click on this thing, it'll take you to this thing so you can fetch your alerts from this place. Yeah, it's weird, man. I can tell you it wasn't this restrictive back in the day. That's it's become more and more restrictive over time. All right, euro dollar. Let's go check out some forex trading. Speaking of forex, there we go, man. Somebody was asking me about forex. Finally are we breaking through the supply zone? It's about time, right, man? About time. So next supply zone up here on euro dollar is this beautiful impulse, balance, impulse continuation right there. Nice area of institutional selling. Some big banker institutions sold heavily here on euro dollar, driving price action down. And that can be a nice opportunity. Obviously, this candle is still active, right, guys? So we're not through the woods yet, right? The supply, we can't delete it yet because this candle is still active. But we have what looks to be institutional demand here, and institutional supply obviously is already existing right there. So if this candle does close above the 722, then we finally have a new level that we can start trading on, which we've been waiting for, man. I dabbled in it, man. Oh, Matt, if you're willing to put the time in, it's awesome, right, brother? Futures is an awesome market if you're willing to put the time in, because it's just, there's no more instant gratification asset class than futures, right? So Mason, to answer your question, I did dabble in doing spreads for a while, never to the level that Blue does. Like, I mean, Blue's such a good spread trader, you know? And he's told me many times, like, he's like, you should get into it, you know? But in some ways, like even though I'm always willing to learn new things, I've learned enough about it that I'm like, it's very cool. I don't want to do it. So like I have done it, but I don't do it actively. And I would by no means call myself an expert in it. Like Blue is an expert in spread trading, right? I mean, he's a master. I would say like a good portion of Blue's trades are spreads, right? Like look at that spread, spread, spread. Blue does a lot of spread trades. I rarely do them, you know. So just a different form of trading than what I enjoy. I like directional trading, but I also like to just set up my trades and go do whatever I want to do for the rest of the day. Like I was going to be done with the live already, guys. I just didn't because I had a doctor's appointment, but they texted me that they had to reschedule. So otherwise I would have been done already. But I have nothing to do today. Like my day is done. I've already done my trading in the morning. I've literally nothing left to do today. My entire day. I'm going to make hamburgers. That's what I'm going to do today. That's my big plan for the day. Is I'm going to go to the supermarket and buy hamburger meat to make hamburgers. So it's not exactly like big exciting day planned. So but I also don't want to occupy my entire day in front of the trading. Like this stuff we're doing here is more fun for me because it's just teaching people about trading and I enjoy it until I get bored with it and then I go do something else. But like to spend all day on the charts the way Blue does, man, you gotta have the passion that Blue has for that. And I just don't have that passion, man. I like trading in the sense of what it provides me in terms of my life, but by no means do I want to spend the entire day trading, Down to the weeklies here on Euro Dollar. We're in an uptrend, higher highs, higher lows, higher highs, higher lows, which means ideally we'd like to go long. If I could go back in time and do everything over again, would you rather do that or stay where you are? I mean, my life's pretty good, Mason. Who say that the outcome would have been the same? So I would stay where I am, man. I wouldn't want to change things. Like I have a somewhat cushy lifestyle, right? Like I really don't like what do I lack in life? You know what I mean? There's nothing that I really want in life that I can't get or that I don't already have, So I'm happy with my circumstance as it stands right now. I'm happy with my life as it stands. I like not having to depend on a job. I like not having to depend on others. I like that I'm financially dependent. I'm comfortable financially. I don't need to worry about money, which is really all I was concerned about when I was young was just not worrying about money. I never was thinking like I want to be super loaded or something. I was just like, I just don't want to worry about money, So like there's not really anything I can think of in life. It's one of the reasons like my birthday is next month and the girls are like, what do you want for your birthday? And I'm like, I don't have anything I want, There's literally nothing I want. Because if I want something, I just buy it. So like I don't have a thing I can think of. If you guys have ideas, give me ideas. But I can't think of anything that I want for a present, which makes me a frustrating person on Christmas and my birthdays in that regard. But, I'm pretty happy with what I got, man. My life's pretty good. I believe it, Minch. Oh, I really busted my butt a lot when I was young, Mason. And also I did a lot. I started a lot of businesses, right? I've owned several businesses in my life. I think all of those things were net positive things because it taught me a lot of different things in terms of, like what it's like to build a business. For anybody who's never owned a business, it's a crazy amount of work to build a business from scratch. And the weird thing about owning a business is it's your business 24 hours a day, So like, even when people like with Phantoms, like Phantoms isn't significant financially to me, but I still really care about how people feel about it. Like even when people quit, like I always message them like, hey, is there anything we were lacking on our end? Is there anything that you felt was bad? Like, was there anything that we were doing? The answer, fortunately, so far has been like, no, you guys were great. It's, I haven't been putting the time in. But I mean, like, I do worry about that sort of stuff and making sure that we're providing the best we can on our end. And so it's one of those things where that's a part of my brain that I wish I could shut off a little bit more. Green and blue, I would say, are both better at that than I am. Being more relaxed about that sort of stuff. But I hold tension with things if I think there's things that need to be improved. That's something I would like to change. So that maybe being less stressed when I was younger would have taught me to be less stressed as older. I'm better than I was, 10 years ago, but I would like to do that. So it's a weird thing because it's not stressed about money, but I stress about making sure that I'm doing the best I can with things, if that makes sense. Market will go up July 9th. That's random, JJJ. Why do you say that? That's the way you do it, Knox. There you go, Minge. That's all right, man. You're doing well with your trading anyway, so it's all good, brother. All right. Anyway, euro dollar. Let's finish up with euro dollar. We got introspective now. Let's go look over here on the supply side. I have correlating structure here, but look at how many times we've hit it, hit it, hit it. 2 hits to that level, man. Hit, in, out, in, out. And then this is a little continuation right here as well. Lots of institutional selling we're approaching right now. We just hit that little weekly level. Oh, well, green's confrontational, right? I mean, you got to think, man, anybody who willingly gets punched in the face is by nature confrontational. So that's a green thing. Green's not shy about that. I mean, the best level is still the same one it was, man. Look at this beautiful daily, weekly, monthly correlation at the 1184. Look at that nice, strong impulse. Broke past opposition eventually. Gave a little pullback initially and then broke past opposition. Never been touched. Zones on top of zones on top of zones. I like that level, dude. That's the level I'm most interested in. Now, if we do hold breaking through this supply here on the monthly, then all of a sudden I have viable structure right here, right? Because then this zone becomes viable in terms of risk reward at the 1420. Yeah, green's funny, man. What's up, Amar? How you doing, man? Green's funny, and green's also good at drawing boundaries. Green Green will very bluntly let you know if he doesn't want to chat anymore. He'll be like, all right, I'm tired of talking. I'm going to go do something else. So Green's good at drawing boundaries of what he's comfortable with and not comfortable with. He's not shy about that sort of stuff. They're all different personalities, man. We're all different people. But we get along well, so that's what's good. Plus, we give you guys different approaches to trading, right? We all use the same foundation, but I don't trade the same way blue does or the same way green does. This level's already been hit on the daily. Do you see this? Impulsed out, came back in at the end orders. So this level has been retested on the daily. On the daily here, we've come out. Why is it not grabbing to this? Is it lower? Oh, that's why. Came out, came back in at the end orders and popped out. So we've hit this level once already right there. That was the first retracement. Oh, and now we're back in for the second hit came out, third hit. We're in the third hit on that zone. All right, so actionable trades. That's the one, man. This is the one I like, the 1184. If we manage to candle close with supply, then this 1420 also becomes viable. No, he marks them off with just the lines, Minge. So does green. Green doesn't draw the zones either. I draw the full zone for you guys because I find it more pleasant to look at when you can see the multiple time frame correlation like that. I find it easier to see structure, and I find it more pleasant when I'm looking at a chart quickly than just looking at the lines. 100%, Matt. Absolutely. I mean, I just added this literally yesterday onto the workshop. I'll show it to you guys because I like this analogy with the probability analysis. I added this last night. I literally just put this in last night because I think this makes it very easy for people to understand the concept behind trading. Trading is just probability analysis, right? The best we can ever do with trading is determine whether a trade is a high probability trade or a low probability trade. So if I have to choose, like if both of these guys are going to shoot 10 shots and I have to say which one is going to score more of those 10 shots in, I'm going to choose player B, right? Player B is shooting layups. Player A is trying to shoot 3-pointers. These are higher probability shots. Does that mean every shot that player B shoots is going to go in? No. Some might go in, some might not, right? But I know that it's a higher probability shot. And that's all we're doing in trading. We're just taking the higher probability trades. It's never a certainty. Any trade has the potential to lose. But if I skew and I only focus on trades that are higher probability trades, well, I'm moving things into my favor. All AI, brother. All AI. It was actually super difficult to make this AI image, by the way. Like I had to actually like tweak it to get it to work because I couldn't get them to both face. Like it would just make the players face each other, and I'd be like, have both players face the same direction. They'd be like, no problem. Now the players are facing the same direction. They'd still be facing opposite each other. Like I did it like 10 times. And then I finally had to actually Photoshop it to get it to be that way. It's funny how AI is sometimes difficult to work with in that regard. I like also that I'll be like super positive. I'll be like, all set. Now you have the players facing the same direction. I'm like, they are facing opposite each other. Like, sorry about that. Now it's fixed. Now they're facing the same direction. I'm like, they are still facing the opposite direction. Like just over and over. I tried phrasing it so many different ways, and then finally I was just like, all right, I guess that's what Photoshop is for. I said it that way. I said it, they're both shooting the same direction. I said they're both doing it. Like I said it so many different ways, man, and they just wouldn't do it. It just could not understand it. Sometimes, man, I find it to be a little more iffy for images. That one was a combination of Gemini with Canva. I ended up having to combine 2 different images to make that final image. And if I really wanted to clean it up, like if I was really willing to go into Photoshop more in depth, I could clean it up a little bit more. But I was just like, by the time I was done, I'm like, all right, I'm done with this. This is good enough. We can understand that one guy's further, one guy's closer. Because I originally was going to have one guy at the half court line. I'm actually thinking about tying that into an analogy in terms of how we speak of trades too. Because like to me, if you have a trade that scores like an 18 or above, that's more of a layup, right? If you have a trade that's scoring like a 16 up to an 18, that's kind of like a jump shot. And if you're doing like, 14 up to a 16, you're kind of trying to shoot a 3-pointer. So I'm thinking I can even stretch the analogy out across when we go through the scoring process too. I was talking about that with Green yesterday. I don't know enough about it, Mason. I'm always trying to create stuff that make it easier for people to understand user. I mean, the way I speak about trading now versus when we first started doing these lives is so different, No, she's doing Forex trading primarily, Minj. And I don't know of any good Forex prop, but no, she's on her own accounts. I started her off with, I'm trying to think if this is okay for me to say. I think it's fine. This isn't an earnings representation. I started off, once she got consistent, like I had her practice trade first, and then I had her trade with very small amounts of capital first, the way I did. And then I started off with $5,000. And she's just grown it on her own since then. I think right now she's at like 12K or so, so slow but steady growth over the last couple of years. And I think that's great. Last year she did, I think it was 56% she did last year, something like that. So, she's just improving. Yeah. And to be honest, she's not like super hardcore with it. Like every once in a while she'll take a trade. Like she's not really like in it the way I am at all, There can go weeks where she doesn't place a single trade at all. So I'm happy, like last year was her first year that I would consider to be pretty decent, because 56% is pretty good for, she was 15 last year, turned 16 at the end of the year. And then, hopefully she sticks with it and keeps doing it, because my goal is to really get her to the point where ideally she's making at least six figures by the time she graduates high school. That's what I would like for her to get to, because if I can get her to the point where she's making six figures by the time she graduates high school, well, then I'm putting her into a position where now she's making decisions in life based on things she's passionate about and not of money, So that's the goal for her to be completely financially independent by the time she graduates high school. Yeah, right, Mason? Me too. So would I. But it's one of those weird things that I don't want to over push it, because then it becomes a burden rather than something she enjoys. And like right now it's in a good balance where she still likes it, So it's a delicate balance as a parent where I very much want her to have that skill set because that's going to help her a lot in life. But at the same time, I don't want to be like, did you trade today? Because then it's no longer fun. So it's a little balancing act that I have to perform in terms of it can still be fun for her, but being something where, she's taking it seriously enough. Never had a single other family member take the time to learn, Minge. I've offered other family members. I taught my mom wealth management because my mom's retired. She doesn't want to trade the way I do. So she just manages her own wealth. And that's the only other person I've taught like in that regard. But like my sister, for example, I've been encouraging my sister to learn it for years, man. And that's it. I've been encouraging her to do it for years. And she's smart about how she talks about it. Like she'll be like, oh, I definitely want to do that. But at the end of the day, it still hasn't happened. So there is also the fact that I'm somewhat of a safety net for everyone, right? Like for my immediate family, I'm a little bit of a safety net, right? So I don't know if that's also a thing that exists where maybe some of the motivation isn't there because does it really need to be? Probably not, But I would like her to learn that. So maybe someday she will. Right now she's more concerned with having children and stuff like that, which makes sense at her age. She's much younger than me. My sister's like 16 years younger than me. So there's a big gap between the two of us. Anyway, yeah, dude, that's what I got for you. Done you're $1. Yeah, AMR. Well, it's a weird thing because I don't mind it at all with my immediate family, but then with my extended family, like sometimes I'll have people that aren't that close to me. Like the bane of my existence is when like some random like fourth cousin or something reaches out to me out of the blue, and it's always like I'll always hear about it from somebody else, like one of my aunts or something will be like, oh, by the way, your cousin blah 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 wants to speak with you. And I already know it's coming. Like anytime it's that, it's never something where it's like, hey, I just want to see how you're doing. It's always going to be like trying to hit me up for money in some way or other. Oh, I have some investment I want to do, but I need investors. It's like, ugh, So what's up, Stir? Thank you, man. That's the only downside, but I guess, that's the exchange you get, man. For immediate family, it's nice to be able to have something where they don't have to worry. Yeah. Croatia, huh, man? I've never been to Croatia. do they? Yeah. Oh, Stir. I saw some woman. It's funny because like her ads are like, what did she say? What did she call it? I've invented Duolingo for trading, and I'm like, Duolingo. And he's like, yeah, and like all her ads are like her drinking like a matcha for some reason. I'm like, why is drinking a matcha relevant? Like, why is this the ad? But I'm guessing she must be making money on it. I see the ad pop up all the time. Like I've gotten served up that ad so many times. Hey man. Ugh. I mean, you have this guy here, man, but it's already been hit. So maybe you can get a confirmation down here, brother. on the 162.50 for AMAT. This supply is obviously done. Can't take this demand. That's too close. The supply is gone. Look at that supply. Hit once, twice, 3 times, 4 times. Finally broke on the 5th hit. So supply is gone now. And then let me see if that weekly is still holding. Weekly's currently still holding, but obviously if this candle closes up here for the day, then that weekly's gone. So it looks very likely that we're going to delete this weekly unless something dramatic happens before the end of the day. Next level up here. Awkward structure there. Technically, this is supply. It's just ugly supply, right? But that is a supply zone right there that we're deeply penetrating into. So you have a supply that's been hit once, right? Popped out, and now we're in for the second time, deeply penetrating through it. We'll see, man. I mean, the best potential levels right now on AMAT would be a confirmation right here, brother, at the 162.50. Croatia's a beautiful country. I tend to travel Eastern Europe. I've never been, Minge. I've never been there. Yeah, the matchas I think are funny, man. I have a Ninja Creamy Mason. I actually like them. They're pretty good. So we were talking about that earlier, Stir, because if you're a financial institution, right, like look at SPY here on the dailies. You have institutional buying right here, right? So banks don't mind driving price action all-time highs, and they can have a price target. The reason we have to be careful is because we don't have enough money to move that, right? So like it's not that banks don't mind being in the position towards all-time highs, right? But the problem for us as retail traders is we don't know where they're going to start selling off. My guess, and again, I've never been a market maker. That was never my position in the company, right? But what I was trying to suppose earlier is I was like, if I was a market maker, because they were like, when do you think they might start selling off? And I'm like, I have no idea. But if I was a market maker, I would try and create one more bull candle. I would try and create one more, because if you create a third bull candle there, you've just formed momentum for a lot of retail traders. And a lot of retail traders trade off momentum. So like in my complete non-market maker mindset, because again, never was a market maker, guys, right? So to be clear, don't take my advice on this because this was not my job. But I look at it as like, I would probably want to do that. Oops, not quite that. I'd probably want to do that. I probably want to create that third candle to then start selling off. And I would probably drive that price into wherever my sell-off territory was because they have a target, you know? Don't use it as much as I would like, man. It's actually very good. Waiting for the US trading with trend. Just curious why it keeps. Yeah, I got you, man. No problem, sir. Yeah, 100% stir. Because who knows? Maybe they start selling off at 6,200. Maybe they start selling 6,220, 6,250. Who's to say? You know, I can't gauge where they might start taking profit. But somebody's making a whole lot of money right now driving the highs. And of course, as soon as you start driving price action, retail traders always chase price. So they'll fulfill the prophecy, right? They bought here, and then retail traders start chasing as well, you know? And other smaller firms can also start chasing, right? Because they can place positions. That's what a lot of continuation patterns are. No problem, brother. All right, so we're done with AMAT. What's next? How long have we been going, by the way? I don't even know. But see, the conversation's been fun. So that's when time flies by, man. CART and JetBlue. I don't know if we've done well for registrations for the workshop, but it's been a fun chat. It was good, G. This was a good week of trading. I hope you guys had a good week as well. Shoulda, woulda, coulda. It's all right, man. It happens. Happens, brother. Don't worry. It's always another trade. Maple Bear, huh? There's enough liquidity on it. Is this Instacart? Is that what this is? Is that the logo for Instacart? No, Air Freight Couriers. No, I don't know who this is. Air Freight Couriers, huh? Online application offers grocery. Well, that looks like Instacart. It is Instacart. Okay. Why are they labeled under air freight couriers? That's not really what I would think of Instacart as. I would think of Instacart as more like delivery service. That's so weird. Yeah, no, FTMO was booted from the States, man. They don't exist here anymore. I don't remember why, but I know they were booted. All right, institutional demand here. We have demand. On the supply side, I have a whole lot of nothing. Let's drill down to the weeklies here in Instacart. A little bit of a continuation right there with that gap, awkward gap there, right? Gap up from the base. So impulse, balance, impulse, institutional selling. And on the buy side, not the best, especially with that deep wick. It's not looking like good structure, man. Let's see what the dailies look like. See if the dailies help us clean this up a little bit, because right now it's not looking great. All right, well, we have this pivot reversal off of earnings. So you have this earnings-driven pivot reversal right here. Mark that green for demand. Another one right here. That's already been hit. Institutional buying right there as well. Already hit bounce once, hit bounce twice. So this one's fundamentally driven, so we're going to yellow border it. Things I like about it, though. Earnings were negative. Price action was bullish. So I like that aspect of the earnings. Even though this is an earnings play, I like the fact that it went bullish despite negative earnings, because that's typically more indicative of institutional order flow than of retail, right? Because what are most retail traders doing when they heard this negative earnings report? Most were probably selling, right? And most were probably selling in an area of higher time frame institutional buying. So I like the fact that we have big impulsive movement bullish out of an area of higher time frame institutional order flow with earnings playing the opposite direction, right? So that's more indicative of this being institutionally driven. Probably some big bank institution was buying there. On the sell side, a little bit of a pivot reverse right there, institutional selling. Mark that red for supply. Kind of sort of a level right here as well, right? A little impulse balance, impulse pivot reversal right there as well. Pardon me. Institutional selling, and we're back into that level. It's too close to demand for us to take any trade on it, and this is a continuation. Oh, that sucks. That kind of ruins any structure for us. That little continuation ruins things. Look at that little demand right there. All right. So what is actually viable here? The only thing that's really viable right here, right now, man, would be this supply zone up here at the 45.92. But if you look, can you see how we gapped out and then we hit it? You see how we gapped and hit it? That is the first hit, which means if price comes back up here, we're probably looking at a confirmation trade at the 45.92. The man's been hit once, twice already. So nothing there. And if you can get back all the way down here, 39.92, that's also potential long, right? Potential long, 39.92. So potential confirmation short at the 45.92, potential long here at the 39.92. Cool. That's what I got for you on cart, man. JetBlue, last one. You ready? What was it? My guy, the guy? Am I the guy? Something like that. You still here, brother? Hopefully. Start advanced options, we have to wait to finish before starting futures focus. Only if you've never taken futures focus, Charles. Anytime you're starting a new class, I want you guys focused on that new class. So whether it's a focus or an advanced, if it's your first time taking, I want you focused on one class at a time. Once you've completed a class, you can take and retake it as many times as you want, because most people will retake classes multiple times to understand all the aspects of it, right? But I don't want you guys confusing different things with different asset classes, because I've seen that way too many times. And also, just to be clear, if you work at an investment firm, guys, do they have you take on options and futures simultaneously, or do they teach you one thing at a time? They teach you one thing at a time, right? So it's like, if it's the way they do it at the major investment firms, we're definitely not going to do something different, right? Just got advanced option. Was curious. So I had to wait to finish futures. 3 or 4 videos started futures. You just started futures, Charles, for the first time? Yeah. So if you registered for both, support would reach out to you and say like, hey man, you're double booked for new classes. Which one do you want to do first? They would reach out to you and ask you. So just see which one you want to do first, brother. Oh, JetBlue bounced out of demand, huh? Came back into that demand zone. Well, anybody take it? I definitely don't look at JetBlue. But there it was, that bounce. Yeah. Anytime you complete a focus class, guys, you're automatically put on to the email list for the advanced class, right? But same thing, like if it's your first time taking an advanced or focus class, you're limited to 1 new advanced or focus class at a time. So if it's your first time taking futures focus, then either you would need to complete that first before you took on advanced options, or you'd say, hey, maybe I don't want to do futures focus. I want to switch over to advanced options. And that's fine too. But you would need to choose which one you want to prioritize first. No problem, brother. Supply side, we have this 521 short position, right? Nice sell off there, broke past opposition. So good potential short there at the 521. These are obviously too close to demand, so the risk reward isn't there at this point. I wonder if this long, well, this long's already hit. So if you're going to take this long, it'll be a confirmation anyway. That's it. That's your viable trade, man. Potential short at 521. Future advance. Cool. I've never taken it. Never taken it. I have no idea. I helped Blue build it, but I've never watched it, man. I'm sure it's excellent. Blue's an excellent trader. No thanks, Abdul. I don't want to do a live together. Thank you for the offer, though. All right. I think that's about it for today, guys. Oh, well, that was a good session. Wow. We did almost 3 hours. That was a long session. Thank you for hanging out with me. For anybody who's interested in learning more about trading, if you'd like to learn more, there's a free workshop Thursday. If you'd like to register for it, you can register for free right here. Just go right here to this place, right? That's the place. And then it'll take you right here. And to register for the workshop, you can just click this purple register here button. In the workshop, we will do a deeper dive on all this stuff, guys. So we'll teach you a lot more about how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly so you can reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it, guys. It's free, it's fun, costs you nothing but some of your time. And if you're interested in becoming a member of Trade Phantoms and you want us to actually teach you how to trade and trade live with you and provide you with trades that we ourselves take in the market and so on and so forth, you will have a special opportunity to enroll at a discounted rate. Cool. Maybe, Mason, I'm not sure. Who's to say, man? It's hard to tell, right? It's hard to tell. I haven't gotten a warning so far, so far so good. Thank you, guys. And then I'll try. I know a few guys asked me about doing the session at night. I'll try, guys. I know I used to do them more. I haven't done a lot live at night in a long time, but I'll see if this week if I can, I don't know, squeeze some night sessions in. All right, but either way, I'll be live tomorrow at some point, I'm sure. All right, guys, take care, everyone. Have a great rest of your day. This is Mr. Black signing off. Take care, everybody.